Hello, all of you. I hope you all are doing good. So today we will start the Schedule 3 of Companies Act, how we prepare balance sheet. We'll discuss each and every point. But before that, what we will do that, we'll do the revision of our previous session. So what we discussed in our previous session that about accounting, the process that here. So they say here, what do you mean by entity? Entity means is an organization or an individual for whom we are doing the accounting. Transaction means a business dealing which can be measured in terms of money. Okay. Now, all these transactions should be recorded. Where we record? We record in a journal. Journal is the first book in which we record all the transactions. Okay. There are two approaches to do the accounting entry, to pass the accounting entry: traditional approach and modern approach. Traditional approach through personal real nominal rule, and then the modern approach is basically by increase and decrease. So asset and expenses has debit balance. So whenever asset or expenses increases, we are going to debit them. Whenever they are going to decrease, we are going to credit them. Liability, income and capital has credit balance. Whenever they will increase, we will credit them, and whenever they will decrease, we will debit them. So it is just a math. Okay, debit plus. You can see that here debit balance that they have, we are debiting there. So increase, we have to add them. Debit balance, we are crediting it. So we have to less, decrease. Okay, so debit credit less, credit plus, and credit debit minus. Okay, simple math. Now what we do that ledger is a book in which we maintain so many accounts, and the process of transferring the information from journal to ledger, what we call them posting. And what are these accounts? It is the information of same nature we recorded at one place, we call them accounts. Okay, and the process of transferring the information from journal to ledger, what we call them posting. Then what we do the totaling and balancing of all the accounts. If in my account debit side is more than the credit side, we call them debit balance. If credit side is more than the debit side, we call them credit balance. Now basically the chapter starts here from trial balance that is. So what is this trial balance? It is a place where we record the balances of all the accounts. Remember that they will give in question trial balance in this additional information. So trial balance, basically this is the statement in which we record balances of all the accounts at here. So asset and expenses always have debit balance, so it will come in debit balance column. Income, liability and capital has credit balance, so they will come in credit balance column that here. Then they will give the additional information. It might be related to the disclosure. Disclosure means that here only disclosure is required as per Schedule 3 of the Companies Act. So we'll see that today we are going to discuss where they tell us to disclose it, so that it will be easy for the user of financial statement that here to get the or to understand the properly the financial statement. So we'll discuss those items where it is mentioned that we have to disclose them separately, notes to account. But this is main part adjustment. What is this adjustment that we have to? These are the entry which we have not yet passed, still not yet passed. So we have to give the adjustment directly in financial statement. So remember that when we write it down, the item of trial balance in financial statement, we write it down at one place only. The reason is that we have already passed the accounting entry of trial balance item, which is appearing there in their recording stage. But when we come to additional information, this adjustment entry, we have not yet passed the entry. So we know that here we follow double entry system. For these items, we have to give how many effects? 2 effects we have to give them. Now, then we prepare a financial statement that here. Okay, in remember the disclosure, we don't give them the 2 effect. This is just for the purpose of disclosure. Then we prepare financial statement that they will ask you in the examination to prepare the financial statement. But we are not talking about the proprietorship or partnership firm, because that already covered at foundation or at graduation level. Here in intermediate, you have to prepare the financial statement of companies, and that we prepare as per the Schedule 3. But Schedule 3 talks about only the presentation of financial statement. Obviously, the basics of accounting is not going to change ever. It is only the presentation style is going to change. We have to prepare the financial statement on the basis of Schedule 3 of the Companies Act, and then we'll prepare what? Balance sheet and the profit and loss account. So Schedule 3 has 3 divisions, division 1, 2 and 3. 2 and 3 is not in a syllabus. Okay, 2 is in CA final, 3 not even in CA final. Those who follow Ind AS, they have to follow the division 2 of the Schedule 3. And division 3 is for the non-banking financial company. But when I say that Ind AS that here, it's a separate series of accounting standard which is at CA final level. Now, in basically division 1 follow those entities those who follow the accounting standard. This is at inter level. So division 1 have 2 parts, part 1 and part 2. Part 1 talk about balance sheet format and part 2 talk about statement of profit and loss. Okay, so there is no trading account here. Okay, might be in foundation level or graduation level. When you prepare a financial statement, you prepare trading account, profit and loss account, and then balance sheet. We don't have any trading account here in Inter. All the items of trading is going to appear in my P&L account only, and we call it statement of profit and loss. So what we are going to do today, we will start with the balance sheet here. Okay, I will discuss with you schedule 3 part 1 balance sheet, and we are going to solve the question on it all. So okay, yes, we also discussed what do we mean by asset. So here I have not written the definition of all these stuff. In a simple words I have written, what is asset? Something we control and we will get the benefit from it in the future. What we control, like land and building, plant and machinery, debtors, we are going to receive the amount from them. Okay, these are assets. What is liability? Something which we are liable to pay. Okay, liable to pay. So like the bank loan that we have taken, it's a liability. Now account payable, trade payable, credit, all these are liability. So assets minus liability is the owner equity. It belongs to the owner. We call them equity. Equity means that the business is liable to pay to the owner. Think from the business point of view that okay. So business is liable to pay to the outsider. We call them liability, and the business is liable to pay to the owner. We call them equity. So from the business point of view, both liability and equity both are liable to pay by the business. But in one case, liability is liable to pay to the outsider. But when we talk about the equity, he is liable to pay to the owner of the business. Okay. What is the expenses? Expenses means the costs are incurred to run the day-to-day business, like the purchases, salary, rent, all these are expenses that okay. And then we have an income. Income means that amount that we earn from our core business activity, like the sale of goods, okay, or other income. Other income might we have, for example, you purchase the shares of some company, you receive a dividend on them, dividend income, interest income. Right? So these are come under the other income. That is not a core, that is not from the core business activity. We call them other income. Now, what we'll do that here now, in our previous session, we discussed that in balance sheet, out of these 5 items, 3 items is going to come here, equity, liability, and the asset. So what we'll do that here now today. Today we are going to discuss that here now, the schedule 3 part 1. You just have to listen me carefully. No need to write anything. When I say to write something, you just have to write it down in rapid gist only. Okay. So if you have rapid gist, that is perfect that here. So it will be easy for you to write it down here in rapid gist only. Okay. So let's start that. Almost 99% already written there. If I say something to write, then you can write it there. Okay. Now, Schedule 3 to the Companies Act 2013, the part 1 is balance sheet that here. So how we are going to prepare them here? We will write it down the name of the company, which company, entity for whom we are doing accounting. Then we'll write it down the balance sheet as that. We are talking the which date, okay, date of balance sheet. And here is the rupees in, I'm just certain it might be figures in thousand or in lakhs. We have to write it down. Okay. Now remember that now here, when I talk about the first is the equity and the liabilities that we have here. Okay, equity and the liabilities that we have here. Okay, equity and liabilities, and here we have assets. So in equity and liability side that here now, what is going to happen now? This is the part which belongs to the owner of the company. We call them shareholders fund. So I will discuss with you the shareholders fund. This is one part. Okay, this is one part. This is another part, that is what a liability that here. This is what liability that here now. And then asset is the third part here. So I will discuss with you each of them one by one, and please understand this one. You don't have to mug up things. You just have to listen me. And I assure you that here, at the end of the chapter, 100% each and every point you will understand that here. You don't have to worry. In examination, they ask on these chapters around 14 marks. So single question might become an examination for 14 marks, but don't worry. I am sure that if you follow my instruction that here, if you listen me carefully, 100% you are going to score 80 plus in advanced accounting that year. And you should aim so high. Your target should be 80 plus in advanced accounting. Now from today, the passing percentage to clear the accounts paper is not the 40 out of 100, it is the 80. If you get 79, you will not clear examination. Okay, joking. But for you, the target should be the 80 plus in advanced accounting. Okay, and it is easy. It is not at all difficult that. Okay, just you have to listen me carefully. Okay. Now, how we prepare the financial statement, that is the particulars, then here the note and the amount that here. Okay, so these portion, that the first portion, this they talk about what? It talk about the equity. Okay, talks about the equity. Okay, then second portion, it talks about what? Liability. And then here, the third portion, it talks about what? Assets here. Okay. Now understand this point. What does it mean liability here now? When we talk about a liability, that is something, what do we mean by, equity? When we talk about the equity, what does it mean that equity? Equity means that belongs to the owner of the company. Okay. That's something the business is liable to pay to the owner. So there are three sections of it. Okay. Shareholders fund, it belongs to the owners of the company. It has three sections, mainly two. The three I will explain you, but mainly A and B. The first portion is share capital, is that okay? So first portion is share capital, and in examination, you know what is going to happen now. And even when we are going to solve the question, we have to prepare the notes to account. What do you mean by first of all notes to account? That as you can see that here we have a share capital here. It means that they are saying note number 1 talks about the details of the share capital. So here we will write it down the final amount. But how we have find it out that final amount? Where we will see that? We will see the details there in share capital account. The share capital is basically detailed version of the detail of the share capital amount, that how we find it out. I mean to say how many shares we have, equity shares, preference shares and all that. So now we will go to note to account number 1, and I'm telling you that please don't try to mug up anything. Just try to listen me. Just listen me. I'm not worried about that to mug up. I know that you will come to, you will be at the end of the chapter, you will be super expert here in these all these financial statements. Don't worry that. Just listen me, which is more important. Okay, listening is more important. Okay. Now I'm not worried. You will understand each and everything. Don't worry. It might be happen. When I will explain you something, it might be happen. You understand 70-80%. It's okay. Because when we are to solve the question, when we have a numbers there, when we solve the question, that you will easily able to connect all these points there. Okay. So don't worry about that. Just you have to listen, which is more important. Okay. Now, and I don't want you become a chartered accountant, and I'm going to say that here. Even when you once you become a chartered accountant, that it is very important that understanding level. If you want to get the expert in accounts, you know what is important that here? Not that I'm just saying, you have to go to in-depth understanding. And when I say in-depth, certain people say it is very difficult. No, it is not at all difficult. Please understand. Accounting is the easiest subject you have at inter level. It is the easiest subject that you can score the maximum numbers here. Okay, 80 plus should be the target that day. Believe me, easy subject, maximum marks. What more you want? Okay, so let's go to the share capital that day. Okay, now understand. I will go to notes to account number 1, which is here in page number 3. So notes to account number, when I go there, it says that. Okay, you just have to listen me carefully. Notes to account number 1, share capital. Okay. Now, I'm telling you, even if you understand 70%, that is more than enough, because when I'm to solve question, we have a numbers, so it will be easy for you to connect there. Okay, just listening is more important here. So when I say the share capital, this is one type of share capital. We call them authorized, and one is the issued, subscribed, and paid up capital. What do you mean by authorized capital? Authorized capital means the maximum number of shares that we can issue in the market. So when the company incorporate that here, they mention the authorized capital, which is the maximum number of shares that they can issue in the market. That we call them authorized capital. For the purpose of information that we have to provide to the users of financial statement, we have to tell them that here, these dots are the shares, number of shares like the 10,000 shares of rupees, whatever the face value of that each. So here it will come the amount. And remember that this amount is just for the reference purpose. This is not the share that we have actually issued. This is the maximum number of shares that we can issue in the market. What we call them? We call them authorized capital. Okay. So if it is mentioned in question, then we have to show like present like that. Okay. Then issued, subscribed, and paid up capital. How many number of shares actually the company has issued in the market? So for example, 50,000 is the total number of shares. We issued 40. So you will write in 40,000 shares of rupees, whatever the face value. So here this amount will come. Always remember that. Share capital always represent only face value. It always represent only what? Face value. What is the face value to understand this here? Okay. Now if I say that here now, this is face value is rupees 10 that here. Now issue price that here now, issue price. Okay. I'm saying issue price. At what price we are selling in the market? If we are selling in the market, let's say at rupees 12. At rupees 12 that here. Okay, now understand that understanding is more important. I'm not worried about the marks. I know that you're going to score 80 plus. Now focus is more important. Okay, If suppose the face value of the share is rupees 10, and if your IP is the issue price, if your issue price is the 12, we are issuing at what? Premium. If suppose the face value is rupees 10, I am issuing at 10 only, it is at par. If the face value is rupees 10, I am issuing at 9, it is at discount. You will never see issue of shares at discount because it is not allowed by Companies Act. It is not allowed by Companies Act. So you will never see that we issue the shares at discount that year. Okay. Face value of the shares, can we issue at 9? The answer is no, because it is not allowed at Companies Act. Okay. Now, so we will focus on these 2 points only. Okay. What do you mean by we are issuing the shares at premium? It means that we are issuing more than the face value. Suppose here the face value is how much here? 10 that is. And we are issuing them at what price? We are issuing them at what? 12. So we are issuing shares at what? Premium. We are issuing shares at what? Premium. And here the face value is 10. We are issuing at 10. It means we are issuing shares at what? Par. Always remember that when I say that we are issuing shares at premium that here now, so does that mean this 12 is going to appear there in my share capital? The answer is no. Always remember the share capital. In share capital, always we write it down. Okay. Always we write down only face value. What does it mean that? If the face value is 10 and I have issued at 10, then there is no problem. 10 I will write it down there. If the face value is 10 and I have issued at 12, so here I will write it on 12 or 10? 10, because the 10 is the face value. What about the 2? So here in these 12 that here now, what is going to happen now? Issued at premium. So here the face value is 10. I have issued at 12. So let me bifurcate this. I have issued at what? 10. The face value is 10. I have issued at what? 12. So this 10 is going to be write it down as share capital because that is face value. And this rupees 2 we are going to write it down as securities premium. And that is a part of reserve and surplus. I am repeating that here. What is the face value here? 10. What is the issue price? 12. So are we going to write it down 12 in the share capital? The answer is no. We are going to write it down here. Only 10 we will write it down. What about the remaining 2? That will go to security premium, and that is a part of reserve and surplus. You got the point here? Okay, this is how we write it down. Okay. Now, so I will write it down all the face value of the share that we have issued that year. Okay. But I told you that here. They will give you certain times. If you remember that now, I told you in previous session that here, certain time they will give you that here, certain information only for the purpose of what? Disclosure that here. Only disclose in the notes to account. So this is one of them here. They say that now, if any shares I am issuing that, I am saying that here, if any shares I am issuing that here now, other than the cash consideration, I have to disclose them. I am not saying we have not issued the share. We have issued the shares. Okay, we have issued the share. But out of those shares, some share that we have issued other than cash consideration. Now you will tell me that here. So what does it mean that other than cash consideration, that you have issued certain shares and which are other than cash consideration? Let me give an example that here. Suppose the total 40,000 shares that we have issued and the rate is rupees suppose 10. So I write it down here, 40,000 we have write it down there. But no, it will come 4 lakh. Okay, so we have write it down here. 4 lakhs we have write it down here. Okay, but what happened that now? Out of these 40,000 shares that we have issued, nothing wrong in that. But suppose if I say 5,000 shares that I've issued, which is other than cash consideration, other than cash consideration. So what do you mean by other than cash consideration that here? So suppose out of 40,000 shares, the 5,000 shares are that we have issued, which is other than cash consideration. What does it mean other than cash consideration? Which means that we issue shares, we issued the shares that day, but we have not received the amount. What does it mean that we issue shares but we have not received the amount? Let me give an example that here. I am giving you shares. I am giving you shares. So I say, okay, take the share capital. This is the share capital of my company that is. So I tell you that here. Okay, this is a share certificate. Take the shares of my company that here. But in return that I am telling you that here now, don't give me the amount. I want this land and building. I want this plant and machine, or give me this furniture that here. So I'm giving you something, I'm giving you shares that, but in return, I am not getting the amount from you. In return, I'm getting something else from you, not cash. I'm getting from you like furniture or any asset that I'm getting from you. So this is the issue of shares other than cash consideration that here. So other than cash means we are issuing shares, but in return, we are not getting the cash here. In return, we are not getting the cash here. You got the point here? So we are not getting the cash here in return that here. So, but you know what entry do we pass? Just for your knowledge, I'm saying they will not ask you an examination that. Just for your reference, I'm saying that here. Suppose I can give you 2 examples of that. Other than cash consideration, I can give you 2 examples on that. Okay, to understand this. For example, that now I gave you land and building. So I told you that here. I gave you land and building, and I told you that here. Give me in returns. I gave you shares, and I told you give me the land and building in return. I gave you shares, not land and building. So when I issue the shares, I am to write it down here. Share capital, because increase in capital should be debited. So when we issue shares, the share capital account will be credited. So we'll say, wow, perfect. So share capital account will be credited. But can I debit to cash account here? The answer is no. I cannot debit to cash account. The reason is that here, I am not getting cash from you. If I am getting cash from you, then logically it is correct that I have to debit to cash account. I am getting in return the land and building from you. So I am to debit here land and building accounts. I will get from you land and building account. So land and building account. So what is going to happen that here now, when I say land and building account, so here what happened now is that here now it is other than cash consideration, means there is no cash here. So we issue the shares, but we are not going to receive the cash for that. Okay. One more thing, I'm just giving an example that here. Okay. So any such share that we have issued for that we have not received the cash, or we are not going to receive the cash that here, we call them other than cash consideration. Just for the purpose of disclosure, we have to disclose it of the above. It means out of these 40,000 in our example, 5,000 shares in our example, 5,000 shares have been issued for consideration other than cash. It means we have to mention them where we issue the 5,000 shares other than what? Cash consideration. You got the point here? Okay. No need to write it down amount here, which is already part of this 4 lakh rupees that here. Here we are mentioning just for the reference purpose. So users of financial statement will know that these shares that they have issued for other than cash consideration. Okay. Now what happened that here now? When I say other than cash consideration. Okay. Now what happened now here? It says that here now, let me give you one more example of other than cash consideration, like the example, the bonus share that we are going to discuss in the investment chapter also that, okay, or not just in investment, next chapter also the buyback of securities. Anyways, that is. So bonus shares means we are issuing the shares free of cost to the existing shareholder. We call them bonus shares. So when I say that here, we have to issue the shares to the existing shareholders free of cost that here. So what we have done that here now, for example, we issue the shares. Okay, I'm going to write it down here. Share capital account will be credited here. And I will write it down reserve and surplus account debit. Don't worry about the entries that here. Why I am debiting to reserve and surplus that here? Because I have issued the shares without any cash. I'm not going to receive any cash other than cash consideration that here. But if it is a free of cost, my share capital is going to increase because we issue the capital. But something should be debited now because we follow double entry system. So basically we are adjusting the profit of the company. So we reduce the profit. The profit is a part of reserve and surplus. So I will debit to reserve and surplus. What we'll do that here? We will debit to reserve and surplus here, and we're going to credit share capital account. Okay. But don't worry about this entry. This is not a part of this chapter. I'm discussing with you. In both the entry, you will observe that we credited to share capital account, but we have not debited to cash account. So we call them other than cash consideration. You got the point here? Okay. Now, I will come to these calls in arrears. Okay, I will come to these calls in arrears. Don't worry for that here. Okay, but there's one note that I want to discuss with you. They say in the note that here now, what it says that here, for the past 5 years, companies must disclose in the notes to account the total number and type of share issued as fully paid without cash, and the aggregate number and the class of fully paid bonuses. Basically, they're telling us that here, if any share that we have issued other than cash consideration that here, does that mean for the whole life of the company, every time we have to mention that this much number of shares that we have issued other than cash consideration? The answer is no. Suppose I am preparing balance sheet today, and in the previous 5 years, if I have issued any shares other than cash consideration, then only we have to disclose them. Then only we have to disclose them separately. Okay, otherwise there is no need of it. I am repeating it that way. Suppose you are preparing balance sheet today, and in the previous 5 years, if you have ever issued shares other than cash consideration, then only you have to mention separately. Otherwise, there is no need of it. Okay. Now, very important point that here now. They say Schedule 3 does not require the disclosure of the source. Now, what does it mean that now? Now, interesting is that here. I say that here now. Here they say does not require to disclose the source that here. Okay, what does it mean? Source that here. They tell us to mention there how many number of shares that we have issued other than cash consideration. What they tell us that here to mention there how many number of shares that we have issued other than cash consideration, that we have to mention them. Okay, but I am saying that no need to mention the source. What do you mean by source here? Let's take an example that here. As you can see that here we were discussing about the bonus shares. I was discussing about the bonus shares here. Okay, I was discussing about the bonus shares here. So we know that here now we issue the bonus shares. Example 5,000 bonus shares we have issued that here. But no need to I'm going to say the disclose here. What is the source? Means which reserve I have utilized to issue the bonus shares. No need to mention the source. No need to disclose the source from which reserve we have issued the shares or bonus shares. No need to mention the source. Only it is sufficient to mention that we issue the shares, that we have issued the shares other than cash consideration. That only the number of shares. That's it. Okay. Now, and I'm not in a hurry. I don't want to make it complicated. I want to make it so simple for you. So simple for you that this is my the purpose. And we are going to solve so many questions. Don't worry for them. Just listen here carefully. Now, what is this? They tell us that you to less the calls in arrears. That what is this calls in arrears? That first of all, and why they tell us to reduce it that. Okay, to understand the concept here. What they tell us that here now, when we talk about the calls in arrears that here, what do you mean by calls in arrears? First of all, calls in arrears means something we call from the shareholder and they didn't pay us. For example, you are my shareholder. Now I call you that suppose the value of the shares is 10 rupees. I call you out of 10, suppose you already paid me 6. So 4 is not yet paid. So I call to pay the 4 rupees to me, the remaining 4. You didn't pay me. So I called you to pay me and you didn't pay me. We call them calls in arrears that. Okay. Due but not paid. I told you to pay me the 4 rupees remaining 4. But you didn't pay me that year. We call them calls in arrears that year. Now you will say, sir, why we deduct the calls in arrears here in share capital? Now, first of all, that here, calls in arrears has debit balance. You will say, why, sir? Capital always have credit balance. What are you talking about, sir? Capital always have a debit balance. Sorry, capital always have a credit balance. If you remember this, I told you that this capital always they have a credit balance. So you will tell me, sir, no. What are you saying, sir? Capital has a credit balance. I agree with you. Capital has a credit balance that year. But I am not talking about the capital. I am talking about the calls in arrears that. And calls in arrears has what? Debit balance that year. You will tell me, sir, why it has a debit balance? Something I called to recover from it, which is receivable. So calls in arrears, it means that which is receivable from you, which is not yet paid by you. So something which is receivable, I am going to get the benefit in future, that is the asset. So when I say something which is receivable, what does it mean? That I am going to get the benefit. So when I say that here, I am going to get the benefit, this is asset. The calls in arrears, which is receivable. You have not yet paid. I called you to pay me, but you didn't pay me that year. Something which is recoverable from you, which is receivable from you, that has a debit balance because it is asset. Something which is receivable, that is asset. But they Schedule 3 say, okay. It has a debit balance, calls in arrears. So you will tell me, sir, I told you that here, asset has a debit balance that here. Okay. So you will tell me, sir, it's an asset. So write it down here on asset side. Why are you talking about when we discuss about the equity here, the equity and the liability side here? Because the calls in arrears, it belongs to the same family only. It belongs to capital family, shareholders family only. But the difference is that here the calls in arrears, which is the amount which is recoverable from the shareholder. And always remember that. You have to think from the company's point of view. You are a company, you are preparing your financial statement and something which is recoverable from the shareholder. Something which is recoverable from the shareholder that here. What is going to happen? Something which is recoverable from the shareholder that here. It means that it is an asset for the company. Something we all are a company. Imagine you are a company and I'm also a company. Something which is recoverable from the shareholder. It is an asset that year. Okay. So from the shareholder that year, okay, so it belongs to share capital family only. So they say instead of writing it on the asset side, show as a deduction from share capital. So that's why we show as a deduction from from share capital. These cautionaries we call them. And believe me, the discussion we are doing here, even if you're able to understand the 70% only when you are going to solve the question, I am 200% confident that here you will understand each and every point there, because we don't have numbers here. We are discussing the concept here. So it happens that when you listen the concept that here, it might be happens, you understand 70%. That is more than enough. You are super awesome that. That is more than enough that here if you understand even the 70% that now. Because when you solve the question, easily you will be able to solve those questions. Just listen me carefully. Okay. Now we talk about that here now is the share capital. This is how my share capital notes to account look like. So if authorized capital is given, I will write it down. Number of shares, I will write it down. Issue, subscribe, paid up capital, number of shares. Any shares we have issued other than cash consideration, we will mention there in inner column. And if there are any call scenarios given in trials, we will show a deduction from share capital, and this amount will be the amount of share capital. Perfect. Now, moving to the second point right now. This is what reserve and surplus. What is this reserve and surplus? That basically the shareholders fund is something that belongs to the shareholder of the company. Okay. Now, what is this reserve and surplus? Reserve and surplus, basically it is a profit which we have not yet distributed. What is this reserve and surplus? This is the profit that we have not yet distributed. We call them reserve and surplus that is. So when I go to this notes to account number 2, reserve and surplus. Okay, when I go to notes to account number 2, which is reserve and surplus, what happened that here? In that reserve and surplus, okay, so many things I will discuss with you. Just you have to listen me carefully. Okay, so this is my reserve and surplus that here. Now, what is this reserve and surplus? It is a portion of the profit which we have not yet distributed. Now, different name of the reserve. Now, let me tell you that here. From point number A to point number G, it represents the reserve, and this point number H represents the surplus. So let me write it down that here now is a reserve, and let me write it down here the surplus. Now, understand the difference between reserve and surplus. First of all, that reserve means it is a portion of the profit that we keep it aside for some other purpose, or this profit generated from some other specific purpose, from a specific source that year. Okay, so it is the portion of the profit that we have keep it aside for some specific purpose. It belongs to the owner. Okay, there is a portion of the profit only that we have not yet distributed that year. And what is this surplus? This is the profit that we have find it out from the profit and loss account. Okay, so now my P&L account tell me that this much profit I have, that we will call as a surplus there. But both are the undistributed profit which we have not yet distributed, and that is going to be recorded under the reserve and surplus that is. What is this reserve? It is the portion of the profit that we have not yet distributed and keep it aside for some purpose, or this reserve, this profit we have made from some specific we can say that this is specific profit, the portion of the profit that we have made from some specific source. I will give you the examples there. Okay, don't worry. But this is the normal profit that we have, which we have generated from the core nature of the business, like the purchase and sale of the goods. Okay, this is the profit that we have find it out in profit and loss account. Okay, now whatever is that, altogether this reserve and surplus is a portion of the profit that we have not yet distributed to the shareholders of the company. So these reserve and surplus, it belongs to the owner of the company. Correct? It belongs to the owner of the company. So we write it down under the category of reserve and under the basically the shareholders fund, and these are B point, this reserve and surplus. So we write it down this reserve and surplus that under the shareholders fund. But you don't have to worry for all these names here, like you can see that now here is the capital reserve, capital redemption reserve, securities premium, debenture redemption reserve, revaluation reserve, share option outstanding account. What is this? You will tell me that. Don't worry that here. All these points is going to come in other relevant chapter that here. But understand the one thing is common that here, reserve. Securities premium is also a profit. The surplus portion of the shares is of ₹10. We issued at 12. We made a profit of how much? The 2 years. The surplus over than the face value. So we record as a securities premium, reserve and surplus. This reserve, share option outstanding. What is this? This is new term for you. I will discuss with you in a buyback chapter. But what is the all reserve is going to be recorded under reserve and surplus. Remember one thing that here. And whatever profit we have during the current year or the previous year profit, that we call it as surplus. We show it in the profit and we show it is a, that basically we find it out this profit in profit and loss account, and obviously this profit belongs to the owner of the company. That's why we write it down under reserve and surplus. And don't worry about the name of this reserve. The capital redemption reserve I'll discuss with you in buyback of shares chapter. Okay, so don't worry. For the revaluation reserve I will discuss with you in accounting standard 10. So don't worry, all these will come at some relevant place, but time being understand reserve is a part of the profit that we have not yet distributed that year. Okay, now the very important point that I want to discuss with you, they tell us that here now what are the notes that related to these, the note that here. The first note, listen carefully. This is show addition and deduction under each specified head since the last balance sheet. What was the balance we have in the last balance sheet? They ask us that. What was the balance we have in the last balance sheet that year, and what's the balance we have? Suppose I have some reserve, let's say the capital reserve I have in last balance sheet, it was suppose 10 lakh. Now it is 20 lakh. So, or let's say 15 lakh. So how it increased from 10 to 15? So there's the addition of 5. We have to show that. Okay. Now this second point is very interesting. Now just you have to first listen me, then I will read the point there. This is my balance sheet. I'm writing in a T form to make it simple for you. Okay. This is my balance sheet. This is my balance sheet here. Okay. This is my balance sheet that here now. And in my balance sheet here on liability side, I write it down reserve and surplus. Okay. Now I have a reserve and surplus. For example, here, revaluation reserve, I have 5. Okay. Is it visible? Yes. Now I have suppose general reserve, that is suppose 3. Okay. Now I have here the surplus, which is profit and loss account. I'm writing down as a negative figure 10. You'll say, what, sir? It's a profit. How can? No, I say it is not a profit. It's a loss. So it is a loss. So can I show as a negative figure? The answer is yes, because loss is a debit balance and profit is a credit balance. So can I write it down as a negative figure here? The answer is yes. We can write it down as a negative figure here. Okay, we can write it down here as a negative figure. Now what is going to happen that now, so they say specifically mentioned in schedule 3 that here, this profit and loss account should be shown, if it is a loss, should be shown as a negative. Okay, I will show the negative here. No problem, it's a loss. No need to write it on asset side. Okay, I will show as a negative figure here. But they say even though when you do the total of all the reserve and this loss, even though in outer column if it is coming negative, no problem. What does it mean that? I have a revaluation reserve 5, general reserve 3, 5 plus 3, 8 and minus 10. In outer column it is coming how much here? 2, negative 2. So when I say that here now, is it okay to do that? Even the outer column is coming as a negative. The answer is not okay. We have to do it because the schedule 3 tells us that here. If it is a loss, write it down as a negative figure. Even though when you are doing the total, the outer column is also coming as a negative figure. It doesn't matter. We have to show like that only. Now read this sentence. What did it say that? Now they tell us that here now is debit balance. Debit balance in the profit and loss account statement will display as a negative amount. Displays a negative amount under the surplus, and after accounting for negative surplus, the balance in reserve and surplus, okay, will be shown even if it is negative. Even if it is negative, even though that here in outer column that even if it is coming as a negative, no problem, we'll show it as a negative. Remember this, okay? Okay, no need to muck up. Just listen. Okay, not more than that anything. Now the third part is what? Money received against the share warrant that year. So there is no notes to account, and institute will never ask on this money received against the share warrant that year. Money received against the share warrant, they never ask you that year. Just you have to know what to mean by money received against the share warrant. Basically, company issue the share warrant, they receive the amount from shareholder, which is not yet share capital because they have not issued the share. But if they receive the amount, suppose I am a company, I issue the shares to you. I issue a share warrant to you. I receive the amount from. I have not yet issued the share. I issue the share warrant to you. So you have the right to receive the shares in future at a fixed price. So it is not. Today it is not a share capital. It is going to be converted into share capital in future. Okay. So that's why they show under the shareholders fund. Okay. Now, if they give you rare chances, I have never seen that. If they give you, then you have to mention here under the shareholders fund that year now. Okay. Now what happened that year now? we will start our discussion on what the liability side that here. Okay. Now remember there are two types of liability, current liability and there are two types of liability. Okay, current liability and non-current. So let me write non-current liability and current liability. Okay. So remember that now we're discussing about a liability. What do you mean by liability? Something which we are liable to pay to the outsider, we call them liability. And there are two types of liability, non-current liability and current liability. What do you mean by non-current liability? Non-current liability means something in general, something which we are liable to pay after 1 year. We call them non-current liability. So as you can see that in non-current liability, we have there long-term borrowings, we have there long-term borrowings, deferred tax liability, other long-term liabilities and long-term provision. Let me tell you honestly that here, we'll discuss all these points here, okay? But generally what happened that, let me go one by one. Long-term borrowings. So remember, no need to learn anything. But when we talk about a long-term borrowing, which means that here, I have taken certain loan and I'm liable to pay after 1 year, we call them long-term borrowing. So it is mentioned in notes to account number 3. So we'll go to notes to account number 3. And what it says that there, okay, what it says that in notes to account number 3, all these are the liabilities. Borrowing generally have the component of what? Interest that we took a loan that year. Okay. So it might be happen that we issue a bonds and debenture. It is very normal that when you will solve question, you will see that there we are basically doing what? We are issuing bonds, generally debentures they give you. Or we have taken a loan from the bank and other parties. Deferred payment liabilities, deposit, loans and advance from related party. Now, long-term maturity finance, lease, obligation, AS19 and other loans in advance. No need to learn this list. Just listen me. You will be remember. Don't worry for that. So whenever you have taken a borrowing, there's an interest component in that. When we pay interest, when we borrow something, okay? So when you borrow something, then there's an interest component in that. That is going to come in long-term borrowing, which is payable after 1 year. No need to learn all these things. No need to learn all that. This is just for the reference. Either you have taken a loan from bank, or you have issued the debenture, or you have issued the bonds, or any deposit that you have taken from someone because you are going to pay the interest on them, or you have taken advance for the loan and advances you have taken from a related party, you're going to pay interest on them. All this is coming under the category of long-term borrowing. No need to mug up the things that here. Just remember that if you have borrowed something and you're going to pay after 1 year, that it will come under the long-term borrowing category. But what is important that here now, if they gave you in question that is the bifurcation of borrowing, if you borrow something, but as a security you have given something, we call them secured borrowing. If you have not anything given under security, we call them unsecured borrowing. So certain time they mention that this is the borrowing and this is the borrowing that we have, and we are going to, and we have borrowed this much of fund and on against this and that security. So we will mention them this borrowing is a secured borrowing. If nothing is given as a security, then it is an unsecured borrowing. So under the long-term borrowing, I'm going to bifurcate between the secured and unsecured. In secured, we are going to write it down all the borrowing against which we have given something as security. Okay. So they say here, borrowings will also be subclassified as secured or unsecured with the nature of what? Security specified individually in each case that is. Okay. Now, understand, this is about the long-term borrowing. But what happened that here now, when I talk about these, the second is that the deferred tax liability. You don't have to worry for the deferred tax liability. That is a part of accounting standard 22. I will discuss there. They will never ask you in these chapters deferred tax liability. But remember, if there is a deferred tax liability, then it is a non-current liability. Now, when you will solve the question, okay, let me highlight this. When you are going to solve the question, these 3 points, you are not going to write it down even when we'll prepare. I mean to say, even when we're going to solve question, when we'll prepare the balance sheet. I will explain you these 3 items. Don't worry for that. Don't worry for that. I will explain you these 3 items that, okay, I will explain you these 3 items that here. But when we are going to prepare the, I think it's too dark, okay. But when we are going to prepare the balance sheet that here, even the ICI, it is mentioned under the schedule 3 that here, but they don't, when they prepare balance sheet that here, they don't write it down because these items generally they don't give in question that here, okay. So let me highlight it, okay. Okay, just give me a minute. Okay. So what happened that these three items are okay. Okay. Now understand this part. What is this deferred tax liability which is going to be covered by accounting standard 22, which is going to be covered by accounting standard 22. Okay. Now it is other long-term liability. Any liability other than borrowing, because it is a borrowing. This is what a borrowing that here. Okay. So any borrowing that here that is going to come in long-term borrowing. They will give you this one, not these three. Other long-term liability means any liability which is not in the form of borrowing. I am liable to pay, but not in 1 year. There is no interest component here. I am liable to pay, but not in within 1 year. So something is mentioned, notes to account number 4, I will discuss with you. Okay. And long-term provision also, what is this? I will discuss with you. Okay. So let's come to that here now. Notes to account number 4. It says that here, other long-term borrowing, they gave us the example, trade payable. What is this trade payable? Something which we purchase on credit. So when I say that something which we purchase on credit, obviously we are liable to pay for that. Now what happened that here now? But trade payable, you will tell me, sir, this is not a non-current liability. It is a current liability, because obviously when we purchase something on credit, we are liable to pay within 1 year only. Okay, suppose you purchase something, they will give you 1 month, 2 month, 3 month maximum. They will not give you the credit period of more than 1 year. So rare possibility that here that we are going to pay after 1 year. So then in that case, trade payable will be part of non-current liability. As there is no interest here, it will be part of other long-term liability or any other liability that here now, which we are going to pay after what here? After 1 year. Any liability that we have taken that year. For that, we are going to pay after 1 year. We are liable to pay after 1 year. That will come under what? That will come under the others. I can give you the example of other also that here. Suppose you purchase a fixed asset. Okay. You purchase a fixed asset. Okay. When you purchase a fixed asset, you tell them that you will pay them after 1 year. If you agree, trade payable generally comes when it's related to goods. When it's related to goods. So you purchase the goods here, which is repayable, or you can say which is payable after 1 year. Generally it not happens. Okay. Generally when you purchase the goods on credit, we pay within a year only. Suppose you purchase fixed asset and suppose it is payable after 1 year. After 1 year. Okay. So that's why they are coming under other long-term liabilities. Now, if I go to balance sheet, then they give us that here. Now it's a long-term provision. Now what is this provision? First of all, that here. Provision by definition, if I tell you that this separate accounting standard provision is 29 that, but I want to just explain you to simplify that. What do you mean by provision? Basically, provision is a liability only. We are liable to pay. Provision is nothing but a liability. But one component adds here. Provision is a liability. But you know, here one additional thing is that we make certain estimation there. So we call them provision. Let me give an example that here. Okay. Now, there is a concept called provision for employee benefit. What does it mean that here? When my employee is going to retire, I will give him some retirement benefit like gratuity, pension, provident fund. All these are retirement benefit I will give him. So when my employee is going to retire, I will give them certain retirement benefit. So whether we are going to pay them today, no. When he will retire, okay. So suppose he is going to retire after 20 years. Suppose. So I am going to pay him after 20 years. I will pay him. Correct. We are going to pay him after 20 years. Okay. Now what is going to happen that now we are estimating certain amount which we are liable to pay. There is some estimation because when we talk about the retirement benefit, it also depend on how much is the salary he has on last salary drawn, all that. There's different calculation of that. But that requires the estimation. That estimation, whenever the estimation requires in any liability, then it is what? A provision. Okay. So any provision that, and its provision is nothing but a liability, but it adds one more thing, it adds estimation part here. So something which I am liable to pay within 1 year, that we call them short-term provision. And something which I'm liable to pay after 1 year and I made certain estimation in it, we call them a long-term provision. Okay. So example they gave us that here now, provision for employment benefit or any other provision that is going to be, the payment is going to be done after 1 year And if we made certain estimation that year, we call them provision. Okay. Now, after this we have done with the non-current liability. But let me tell you honestly, when we are to prepare a balance sheet, when we solve the question, okay? So when we are to solve the question that now, you don't have to write it down these three items. This is just in schedule 3 it is mentioned that, but don't waste your time in examination. You don't have enough time in examination. Practice is very, very, very important. Okay. So instead also don't write it down this. If they ask you, point that 1% is chance that they will ask you this. Okay. If they ask you if you given any question, then write it down, but they are not going to do that. Okay. Now we have here the current liability. Now what do you mean by current liability? Something I'm liable to pay within 1 year. We call them current liability. Now all these 4 points you have to remember, because you have to write it down when you prepare balance sheet. But no need to mug up the thing, because once you solve 3-4 questions, you will understand the format, then you will easily write it down all those points. Okay. Now, so here what happened in current liability? 4 items. I will discuss each of them with you. Short-term borrowings, trade payable, other current liabilities, and short-term provision. So let me discuss with you each of them. What do you mean by short-term borrowing? Short-term borrowing means we borrow the fund. Okay, like you purchase something on Bajaj Finance. Okay, the EMI is for the 6 months. It's a borrowing, and you're liable to pay, and it has an interest component. That is not a part of the long-term borrowing, because you're going to pay within a 6 month only. Okay, so we call them short-term borrowing. Okay, trade payables means something you purchase on credit, the goods, not something. The goods you purchase on credit. But what is going to happen when you purchase the goods on credit that year? You are going to pay within a year only. So it is going to be a part of what? Current liability. Other current liability means there is no specific heading. I mean to say, I might have some other current liability, like I'm interest payable, or any other thing that I'm liable to, like the dividend payable something. Okay, salary payable, rent payable. But that payable is not a borrowing that year. There's no interest component on that. If that payable is not a borrowing, and we don't have any specific heading for like the salary payable, rent payable, okay, dividend payable, we don't have a specific heading for them. All those items for which we don't have a specific heading under the current liability, that is going to come under the category of other current liability. Where we'll write it down? We will write it down under other current liability. I will discuss with all these notes, so don't worry. Then we have a short-term provision. Provision is liability, first of all. But what is the additional point we have? It requires an estimate. So we made certain estimate, but we are liable to pay within a year. So we call them short-term provision. Okay, so let's discuss notes to account number 6, 7, and 8. Okay, now come to notes to account number 6. Repeat this, page number 5. Okay, now what is it here? The notes to account number 6, that is what? A borrowing. That is what? A borrowing. And this borrowing is a short term. This borrowing is the short term borrowing that year. Okay, something which you are liable to pay within a year. Like we taken a loan repayable on demand, we have taken a loan from the bank that year. We take a loan from bank or from any other person, but we are able to pay them within a year. From the balance sheet date, we call them a short-term borrowing. Now, loans and advances that we have taken from a related party or any deposit, generally we tell to customer to deposit the amount. Security deposit, if it is payable within a year, that is going to be part of short-term borrowing or the long-term borrowing. Or any loan and advances we have taken, and that is going to be repayable within a year, we call them short-term borrowing. A very important point that I want to discuss with you that here now. The first and second is simple that here. There's nothing special in that. Obviously, like the long-term borrowing, also short-term borrowing, we have to classify between the secured and the unsecured. Okay, the borrowing which is secured against any asset or unsecurities. Okay. Now, where the loans have been guaranteed by the directors or other, the aggregate amount of such loan under each head shall be disclosed. What it tells us that now, when I say where the loans have been guaranteed, you know that when we took certain loan, this is someone give the guarantee, don't worry, if they don't pay, I will pay that. If any guarantee is given by director or any other, then we have to mention them, these loan we have taken, but it is guaranteed by so and so person or so and so director. Okay, the third one is important. What that is current maturity of long-term borrowing. Now understand this. This is interesting. What does it mean that current maturity of long-term borrowing? Now understand this point here. Okay, now understand this. Now suppose that here now, I have taken a loan for 10 years. We have taken a loan for 10 years. Okay. My financial year ends on 31st of March, suppose 2026. Okay. This is my balance sheet date that year. And here I am liable to pay a loan of 10 lakh. How much loan I am liable to pay? I am liable to pay a loan of 10 lakh that. Okay. Now what is going to happen that now? But within a year that year, something you are liable to pay. Because the balance sheet date, I am liable to pay a total payable of the loan is 10 lakh and I'm going to pay in the next 10 years. So you will tell me, sir, you are going to pay in the next 10 years that year. It should be a long-term borrowing. Correct that. If I'm to pay in the next 10 years, it's a long-term borrowing. No doubt about it that it's a long-term borrowing. But the portion of that, some portion of that long-term borrowing that I have to pay within a year only. What does it mean that? Some portion of the long-term borrowing we are going to pay within a year only. So that is the part of the short-term. Let me explain you that here. Suppose out of these 10 lakh, I'm going to pay 1 lakh within a year and remaining 9 lakh after that. So 1 lakh within a year by 31st of March 2027, and in the remaining years I will pay the 9 lakh. So for me on 31st of March 2026, the amount I am liable to pay out of these 10 lakh, that's represent 1 lakh, and this 1 lakh is not going to be part of even though it's a long-term borrowing, but this 1 lakh I will show as short-term borrowing. What I will show it as a short-term borrowing, and I will show it as a long-term borrowing. This is important point. You know what we call them? We call them current maturity of a long-term borrowing. We have to disclose them separately. So it's a part of the long-term borrowing which I'm liable to pay within 1 year. So instead of writing these portion which I'm liable to pay within 1 year as a part of long-term liability, I will show it as a short-term borrowing only here. So I will show it as a what? Short-term, the borrowing here. Okay. You understand the point here now? This is a part of what? Short-term borrowing. This 1 lakh is a part of what? Short-term borrowing only. Okay. Now, and this short-term borrowing will show under where? Current liability. Okay. Under the short-term borrowing, it will come. I'm to say, to make it simple, in short, short-term borrowing is a part of current liability only. Okay. And the short-term borrowing, we'll write it on current maturity of long-term borrowing. Important point. Okay. Now, after this, we discuss about that here now is the short-term borrowing. Then we have trade payable. We purchase goods on credit. We are liable to pay them within a year. We call them trade payable. Okay. Now, other current liability, if there is no specific heading, something for which I am liable to pay within a year, that is a part of what? Other current liabilities. No need to learn anything. Just listen. Just listen. Okay. Now, I will discuss each of them with you. The first item is that here now is the interest accrued but not due on what? Borrowings. I'm repeating that here now. What is this other current liability? Interest accrued, but not due. So accrued but not due, and here accrued and due. Both are current liability, but you know that there is a difference between both of them. Let me explain you that what is the difference in both of them for your knowledge only. So you have heard so many times in the past in foundation or in graduation level, interest accrued but not due, interest accrued and due, both are current liability, but by meaning if you go to their meaning, the difference in both of them. Let me explain you what does it mean that. Okay, suppose here if I say that here now, your financial year ends on here 31st of March 2026. So when my financial year ends on 31st of March 2026. You got the point? So financial year ends on 31st of March 2026. But if I say that here now, first of all, we follow accrual system of accounting. So on 31st of March that year, okay, on 31st of March, it's a balance sheet date. It's a balance sheet date. Okay. Now on my balance sheet date that here is we follow accrual system of accounting. So I will say that, but for the purpose of interest, they tell me for the purpose of interest here now, the interest is going to due on, bank tell us that here, no. Bank tell us pay the interest on 30th of June 2026 that year. Pay the interest on 30th of June. Okay. But we follow accrual system of accounting. So here what happened? Interest accrued, but which is not yet due, because it is going to be due on 30th of June when bank, on the basis of terms and condition that we have with them, they tell us to pay on 30th of June. So when we are going to pay them, we are going to pay them on 30th of June. So we are going to pay them on 30th of June. But what is going to happen that now? Because I follow across, I am not going to record the entry of the interest of these 3 months here on 31st of March. I will record only interest for these period only, which is accrued, because when time passes, when the period passes, we have to record it because we follow accrual system of accounting. So here for this period, I will record the interest here. But it is going to be due when I am liable to pay on 30th of June. So here basically it is accrued but not due, because it is going to due on 30th of June. You got the point? This is the meaning of accrued but not due. Now let me write it down that here now. What does it mean that here? Accrued and due, both of them. I'm saying that now. Accrued and due, both of them. What does it mean that now? Okay. This is an example of, and I am giving here. Okay. Now understand what accrued but not due. If I say that here now, on 31st of March 2026, that it's a balance sheet date here. And also bank tell us to pay on 30th of March only. It is accrued for the previous period and due. So it both happen. What both happen? Accrued and due, both of them. Because bank tell us to pay on 31st of March. That is the due date. So it is accrued and due both. So both are liability. Both are liability, but there is a difference in the meaning. Because in one case which is not yet due, the due is going to due, it will due on 30th of June. Here it is, the due date is also 31st of March. So the accrued and due both on 31st of March. You got the point out here. So but remember that it is a part of what? Other current liability. When you receive something, income received in advance. Now the question comes in mind. It's an income that here. Why I'm recording is a part of liability. If it is an income that here, it should go to P&L account. Why we are recording it as a liability? The reason is that we are recording it as a liability that here now. Because we are going to recognize something as revenue only when actually we have provided the services. Then only we can recognize as revenue. What do you mean by revenue? Something goods has been transferred, the title has been given to someone, risk and reward has been given, or services has been provided. If I have not yet provided the services, I cannot call it as my income that is. For example, I am doing the teaching that here. The day you purchase the product, I delivered the lecture that is, suppose, okay, I delivered the lecture. Suppose the live batch is going on. Live batch is for the 3 months. So you gave me the amount on the first day only. I cannot recognize it as a revenue on first day because I have not yet provided the services that year. So if 1 month pass, I can recognize the proportionally the revenue for the 1 month. Second month pass, then proportionally recognize the revenue for the second, and then for the third one when I provided services. So once I provided the services, then only I can recognize the revenue. But I have received, suppose we have received the income from the student, live batch is going on. Suppose the batch is for the 3 months that year now. So when I say that I have received the amount that year now, but what is going to happen now? We have received the amount that year now. But what is going to happen that year now? But we have not yet provided the services that year. I cannot call it as revenue. We are liable to provide the services in future. Something which we are liable, we call them liability. We are liable to provide in future. We call them liability. That's why income received in advance is a part of liability. We are going to provide the services within 1 year. That's why we call them, it's a it's a part of other current liability. But will it be converted into a revenue? Yes. Once you provided the services in future, this liability will be cancelled. Then that is a part of your income then. But till now we have not yet provided services. For this amount that we have received, we cannot call it as an income. Okay. Now unpaid dividend means dividend which we have dividend payable. The dividend declared which is not yet paid, or any other payable. Other payable, I can write it down the examples for other payable like the salary payable, rent payable. Okay, we call it other current because there is a separate heading for them. Okay, the short-term borrowing, trade payable, and other current liabilities. Now the next point, or the last point of liability is that here, short-term provision. What do you mean by provisions? Provision is nothing but a liability. But one more thing adds here, that is what we estimate something that here, like the provision for tax. We pay tax in the assessment year. On 31st of March 2026, the previous year, we make a provision that we are going to pay in the next year that year. Okay. Now, what is going to happen? On 31st of March, I create a provision that year. But when the audit will happen, then the books of account will be finalized and the final amount will come that. Okay. So, we estimate something how much we are liable to pay. So, but we are going to pay within a year. That's why we call them short-term provision, or any other thing where we are making estimate and which we are liable to pay within 1 year. We call them what? Short-term provision. Simple. So we have done our discussion for the liability side. Okay. So what we have discussed till now that here, now is the equity and live equity, shareholders fund first, share capital, and what we discussed in share capital, authorized share capital, then issued, all capital will be recorded at face value. Premium is a part of reserve and surplus, and securities premium. Then if any cost in arrears, we have to deduct from it, and if any share that we have issued other than cash consideration, we have to mention in inner column as a disclosure that here. What is the reserve and surplus? This is the undistributed profit of the company, and all reserve and surplus we will write it down under reserve and surplus. Money received against shares for it. Let me highlight that money received against share. All these points I am highlighting this. This you don't have to write it down when you prepare the balance. Even when I will prepare the balance sheet, when you solve the question, I will not write it down this highlighted point here. Okay, that given in schedule 3, but I see also not, because of if you draw balance sheet each and every item, an asset and liability, it will come that here. But what I'm saying, how the way I will present balance sheet, exactly copy paste you have to do it, because you want to score 80 plus in advance accounting. Keep in mind that 80 plus, 80 plus, 80 plus, 80 plus. That's it. If you imagine 80 plus, you are going to score 80 plus. If you imagine for the 60, you will score only 60. If you aim for 40, you will score 40 only. It's all about the imagination. The higher you dream that, the more you will achieve that. Okay. Now, I'm coming to the, no, we discussed about the non-current liability, current liability, non-current liability. We are that is a long-term borrowing, something which we are liable to pay after 1 year. Then the current liability, 4 point, short-term borrowing, trade payable, other current liability, short-term provision. But remember the short-term borrowing, this is one very important point, is the current maturity of long-term borrowing. This is a portion of a long-term borrowing which we are liable to pay within 1 year. That is a part of short-term borrowing. Now, what we'll do that here now, we'll come to asset side that here. Okay, I will come on an asset side, we'll discuss them here, and then we'll one by one we'll go. Don't worry for that here. Okay, now very important thing is that now I'm going to say that here, as you just have started your CA Inter journey that here now, it is very important for you, not just in accounts, that in each and every subject that here, your focus in each and every subject that here, your focus that here, it should be on, I'm going to say that here now, is on the concept. Okay, and don't be so hard on yourself, just focus on the concept that here now. Over a period of time, the understanding level and improve that here, and you are going to clear the examination. And on each and every subject, try to go to in-depth that here. Okay, conceptual creative, because you are going to become a chartered accountant that here. And chartered accountancy is a course that here now, you are going to sacrifice so much in the next 4 years. So much sacrifice you will do that. So much sacrifice you have to do that. Then only you will become a chartered accountant. But let me tell you honestly that here, the day you will become a chartered accountant, after that, you may that heard that this the campus is going on, these are the packages that are offering. Let me tell you honestly that if you plan for the long run, you are going to achieve so much in life. I'm telling you that, because once you become a chartered accountant, your confidence level increases. So I mean, you're confident, whatever you will do in life, you will say, oh, if I can clear this Indian Chartered Accountancy examination, I can do anything in life. Whether you do the business, teaching, okay, and if you do a job, whatever you're doing that here, you're doing a practice, whatever you're doing that, you should aim so high. And you, once you become a chartered accountant, automatically confidence will come, and you will start imagining like that. If I can become a chartered accountant, I can do anything that here. I'm capable to clear any examination that here. This is a confidence boost there. And that is going to help you in whatever you will do in your life that year. Okay. So you have the potential that year. You just have to work hard. And no one is going to change your situation except you that year. In whatever situation you are today, maybe, I don't know that here. Some of you, every family has their own issues that year. Some family might have someone has a health issue. This is the, I'm going to say, everything we can accept it, but the health issue is very challenging that year. Some might have financial issue that year. Every family has their own problems that year. And your age that year, suppose that no one can change if it is from the financial point of view. I don't know that year, but no one can change that situation except you that year. You should aim so high that year. You are going to become a chartered accountant. You will do whatever you want to do, practice, teaching, whatever you want to do that year. But whatever you will do that year now, only you are the one you're going to change the situation. And I believe that here, whatever you will do that year, do with excellence that year. Do, if you are, I'm to say that here, studying this accounting subject, don't just say, okay, it's okay that these are that. No, go in depth that here. Now, when you speak something in future, you should have some weightage there. Okay, when you talk something, when you say something, you should have some weightage. So when you will have a weightage, when you have an understanding so deep, you have to understand this point. I don't want to just make you a student like that who is going to score the marks. You have to score the marks. At the same time, you have in-depth knowledge. You should have in-depth knowledge of this accounting subject that here. Because in your life, when you will become a chartered accountant, you will go and discuss and talk to people. Your imagination should be so strong that year. But now, whenever you discuss with something that year, you should be able to imagine in the mind. I'm not just saying that I know these points that year. Even if someone tell me when I was sleeping in 2 a.m., someone tell me these adjustments. I can tell them at 2 a.m. also that year. Even I'm sleeping, I can tell these are the adjustments like that. Because I've studied so much to this. I'm not saying I'm super expert. No, I'm not saying that. I'm saying that here, it takes time to become a master in anything. It is going to take time that here. And you have that much of caliber. You change the situation in whatever situation you are, but you have to really work hard that day. And for the boys, I'm telling you that here, I don't have an authority to speak on behalf of girls, but to the boys, I can say that it's a truth that here. Whatever you tell that no, judge the person on the basis of his nature, he's so good in nature, and whatever you tell them, let me tell you the boys, the reality of today's world, if you'll make a money, you will get the respect. That's the truth that here. That's the truth that here. You say, no, sir, in a society that you know, if I'm a good human being, my nature is good, then people will appreciate me. No, nobody's going to appreciate you for that. Let me tell you honestly that here. In today's world, for the boys, I'm saying, if you're going to make the money in future, you'll get the respect on. Then only will get the respect. That's the truth that here. Whatever you tell to society, it doesn't matter that here. But the reality is that here, people is going to respect you. To the boys, if you'll make the money, huge amount of money in future, automatically you'll get the respect. Even though once you make a money, you speak senseless. People say, wow, awesome, how cool he is that here. He's speaking something sensible. Even though you're not speaking something sensible, but if you make the money, people is going to respect you. That's the reality of the society. We cannot change them, accept it. And boys, you have to really work hard. Okay. Now, I'm not saying that girls, because I don't have the authority to write today on behalf of the girls, but the boys, I can say that. Okay. Now come to the point that here now, on the asset side that here. On asset that here, we have again the two things that we have, a non-current asset and the current asset that here. Okay. Now, when I talk about what do you mean by non-current asset? Let's briefly understand that here. Non-current asset means, first of all, what do you mean by asset? Asset means that something I'm going to get the benefit that, something I'm to get the benefit that here in the future over a longer period of time. Okay, I mean, something I have, or I love these mic. Okay. I'm going to get the benefit from these hopefully for more than 1 year. It's a non-current asset for me. So anything from which I'm to get the benefit for a longer period of time, we call them what? A non-current asset here. Okay. And some benefit I'm to get within a year, we call them a current asset, like the inventory. I have an inventory. I'm going to sell this inventory. Then it will convert into cash. I'm going to get the benefit within 1 year. So we call them the current asset that here. Okay. So if I'm going to get the benefit from something over a longer period of time, we call them non-current asset. If I'm going to get the benefit within a year only, we call them current asset. You got the point? So what we'll do that now, we'll discuss each of these items one by one. That okay. Now here, when I talk about these non-current asset that here, so again, let me write it down here. Non-current asset, current asset that here. Okay. Non-current asset and what? The current asset here. Okay. Now understand this part here now. Now what happened now? Here non-current asset, the first point A, PPE. What is this PPE? It's a property, plant and equipment. It deals by accounting standard. I can give the reference accounting for almost all of them here. But intentionally I don't give them because we have not yet started the account. Obviously I take accounting standard later on that here. But there is no use, there is no need to give the references also there, otherwise you might get confused that here. Okay. So first the property, plant and equipment and intangible. Let me connect to both of them here. Okay. The difference between both of them here, first of all, both of them is going to help me over a longer period of time. But the difference is both of them in a PP and the intangible. First of all, we don't call it now fixed asset. It's an old version. We don't call it fixed asset. Maybe certain time we use the word fixed asset because some of you may still familiar with the word fixed asset. It's an old fashioned now fixed asset. We call it PPE, property, plant and equipment. So now we don't use the word fixed asset. We'll call them PP, property, plant and equipment. That is nothing but PPE. So when I say that here, property, plant and equipment that here now, what is the difference between the PP and intangible? PP is a tangible item. We can touch it. Like this mic, I can touch this. Wow. So this is going to help me to generate the revenue that here. So it's a PPE. It is going to give me a benefit over a longer period of time. I have this iPad I'm using for your class that here. It's a PPE for me. It's tangible. And this is going to help me for a longer period of time. I have this Apple Pencil. It helps me to get the benefit over a longer period of time. It's a PPE for me. You got the point? I will come to point number note stroke on number 9 and 10. But what is this intangible asset? Intangible asset basically means that it is an asset that is going to help me that year, but I cannot touch it. What does it mean touch it that year? I cannot touch it. What does it mean that now? Basically that year. Now, very interesting. Yes, we'll come 26. We'll discuss in-depth knowledge. I will give you that here of all these accountings and all these chapters. On the last day, you will understand that in-depth knowledge you have of the advanced accounting subject that here. Okay. Now I'm coming to that here now. The point is the intangible asset that here. Now, certain time what happened that for these intangible assets that here, they carry so much of value that helps me to in the business that here now. But what is going to happen? These intangible asset basically is that here now is helping your business. I will come to let me give an example of the copyright. No one can copy that something you invented, the patent that here, the trademark logos that here. If you want to purchase the Nike shoe that here, you see the logo, then you buy the product that here. Okay, patent, you invent something, you register. No one has the right to the process you're following. No one can copy it because you have the patent for that. So these are the items going to help you to over a longer period of time. But it is not a physical item. For example, patent you registered. It's a single page document, and I saw some patent in my life that year because some patent my wife has a patent in her name. So my wife has a patent in her name that year. So she has a patent that year. She invented something, she registered for it, and she got the approval for the patent from the Indian government that year. So she has the patent in her name that year. So what happened? This is a one-page document only. What is the patent for? And that certificate and her name on that here. Okay. So what happened that these patent basically, these are the invention. If you have done certain invention that year now, what is going to happen that now is if you have done certain invention that now, what is going to happen that now, that is you've taken the patent for that. No one can copy it that here. You have the exclusive right on that. So that is going to help you that certain franchises, certain rights you have. Suppose for example that here, for example, in Chennai airport, so many flights come there. Okay, they land there on Chennai airport that year. So do they have the rights? Yes, they have the rights. They have taken the rights to land their flight like the Indigo, SpiceJet, whatever the airlines, the international airlines, the Emirates and all that. They have the rights to land their flight there. They are paying something for that. So okay, rights do you have? Okay. Now something that is going to get the benefit, you're going to get the benefit, but this is not a physical thing that here. Okay, patent is a single page document that here. You'll say the page is tangible, no, tangible is it? You have to see on overall basis that is okay. So let's see the notes to account number 9 and 10, which is on PP and then on intangible. So they say property, plant and equipment like land, building, plant and machinery, furniture, fixtures, vehicle, other equipment or anything that here. Okay. They say a reconciliation of the gross and the net carrying amount of each class of asset at the beginning and at the end of the reporting period. Now understand this point. What does it mean that now? They are telling me that now a reconciliation the gross and the net. It means how much the gross you have. Basically, they are telling you that here now. You just have to tell them that here the gross they have at the starting of the year. If there is some addition that here now you have to show them the addition. Okay, and if any goods dispose of, then we have to deduct them. Or main part is they ask you to show the accumulated depreciation. How much is the depreciation that we have charged on, and this is a balance amount. These are reconciliation. What is the gross and what is the net? Why there is a difference in that gross and the net that here? Because of some addition or disposal. If there is some disposal, let me write disposal. Okay, and depreciation that here. So that we have to give the reconciliation here. Okay. Then what is intangible that here now? Like the goodwill, computer software. Okay, computer software, nowadays I don't know how the software comes, but when I was in your age that I used to take a software, purchase software that's come in a CD. Okay, so but you'll say no, CD is a tangible item, so we can touch it that, but nobody pays for the blank DVD that here. We pay the content, the software that we have inside. Okay, so we have to see on the overall basis. It's an intangible item. That mining rights you have, copyrights and the patent license or the franchise or any other right. So basically these are the item that helps you to generate the revenue, but there is no physical item. It is that here. Okay, so it is going to come under the category of what? Intangible asset here. Now then again we'll go that here, and these items non-current asset, non-current investment that is. So let me cover here both of them. Here is the non-current investment that here and the current investment, this current. Okay, non-current investment that here and the current investment. Let's connect both of them. What does it mean that here the non-current investment that here now? Now this is separate accounting standard. I will not tell you the numbers and all that, but there is separate accounting standard on that. But I'm simplifying that here. If they ask you in these chapters non-current investment, we'll write it down here. They will not ask you the definition or meaning of that. They will just give non-current investment or current investment. Okay, if nothing is mentioned, just they say investment. So I'll assume it's a non-current investment. Generally, we purchase a non-current investment for a longer period of time. If my intention to sell within 1 year from the date of acquisition, so if my intention to sold it within 1 year, so that is a part of current investment. So don't worry, it's a detailed definition that I'm going to discuss in the investment chapter only. But here they will give you the bifurcation, current and non-current. If they don't give, assume it's a non-current because we purchase the investment for a longer period of time. Now, again, remember this deferred tax asset that here, okay, deferred tax. Okay, let me make a box here. You don't have to write it down that in when we are to solve the question that now. When we solve it, you don't have to write it down. You don't have to write it down these three items. Okay, that is deferred tax asset. Here it was deferred tax liability. Here it's what deferred tax asset. Don't worry, it is a part of accounting standard 22. I will discuss there. Okay. Now, long term, so we have given loan and advances to someone for a longer period of time. That it means he is going to pay me after 1 year. Okay, if they give you, then we'll write it down. But rarely it happens. They give you the long-term loan and advances. If they give you, no problem. We'll write it down here. Or any other non-current asset, means any asset that is for a longer period of time. But let's go to the notes to account number 11. If I go to the notes to account number 11, they say that here is capital advances. Okay, so we have given the loans and advances for the purpose. For example, holding company give the advances or loan to a subsidiary company for the construction of the building that is a capital advances that day. Okay, then they say loan advances we have given to related party, okay, to associate, to joint venture, like that. And others loan and advance, if you have any given and we are giving, it is an asset, so just we have to specify it's a secured or unsecured that here. Okay, now we are coming to part. Remember that what I have highlighted here with these color, you don't have to write it down when we will prepare the balance sheet here. Okay, now all these here, all also that's here. Now we are coming to the part of now here current asset. What do you mean by current asset? That here something which we are going to get the benefit within a year. So I will explain you each of them. Notes to account number 12, 13, 14, 15. So here inventories, closing stock. I'm discussing the meaning here, and we'll go and discuss in detail in notes to account 12, 13, 14, 15. What is this inventories? The inventory is basically the stock we have at the end of the year. But why we call it as an asset? Because it's an inventory. It is going to be converted. Why we call them it is an asset? It is going to be converted into what? Cash. Within 1 year. We will sell the asset, then we will recover the amount from the customer. Sorry. That's why we call them it what? The current asset. What is this trade receivable? That let me go one by one. So notes to account number 12. So when I go to notes to account number 12, inventory. So they tell us that here now is the raw material. Okay, first of all, that here now, when we do a business, it might be happened. We are a manufacturing company. What we are a manufacturing company. So at the end of the year, I might have a 3 types of closing stock. 3 types of closing stock we might have at the end of the year. What is this? First, raw material that we purchase to do the manufacturing. Second is the WIP. We call them what? Work in progress. It means the production has been started. It is not yet finished. The product has not yet finished, and it is not at the same, not in the raw material form. It is in process. We call them WIP, work in progress, and what? The finished goods. So at the end of the year, that what is going to happen that now at the end of the year, we have a raw material that we have, work in progress that we have, and we have what? The finished goods that we have. You understand this point? So this is the closing stock. Why we call them asset? You know that here we call them it is an asset because which is not yet sold. We will sell them in next year. Then we are going to, I'm to say it is going to give me benefit in next year. That's why it is asset. First of all, understand. You write it on the purchase for your understanding. I'm saying a very important thing that here. Do you have prepared the trading account in your life? If you have prepared the trading account in your life, you write it down in your trading account. Purchases, opening stock, you write it down there. Purchases, you write it down. Let me show you that what I'm saying that now. You prepare in foundation level, might be you have prepared this, or in graduation level. This is your trading account that here. In your trading account, you write it down there, opening stock. You write it down there, purchase. Sales, I'm different thing I'm discussing. I'm closing stock, you write it down on credit side that here. This closing stock, basically, if I explain in terms of quantity, so it will be easy for you. Suppose I have an opening stock of 10. I have a closing stock of, I have purchased 90 units more. How many units we have? I'm saying in terms of units to make it simple for you. So if I say that now, how much opening stock I have? 10 quantity. I purchased 90. So logically, when I will record here sales, suppose I record the sales for 80 unit only. I'm writing in units intentionally to make it simple. So don't you think it is illogical to write the expense 10 plus 90 for 100 unit, to record the expense for 100 units and to record the revenue for 80 units? It is a mismatch. That's why out of these 100 units, I have 20 units which is in stock. So that is not an expense for the current year because I have not yet sold the goods. I am to get the benefit in future. So out of this 10 plus 90, 10 plus 90, 100 quantity, I show on a credit side as a closing stock amount, we write it down to reduce the cost because that is not expensive for this year. But when you purchase the good, complete amount you record as an expenses. When you purchase the goods, complete amount you record as what? The expenses there in P&L, like in trading account. So, but some portion which we have not yet sold by the end of the year, that is not expense for the current year. That's why you credit to trading account to reduce the cost here, or deduct from the purchase or show on a credit side. Generally, we show on credit side to reduce the cost because that is not expense for the current year. Got the point? And it shows as an asset because you're going to get the benefit in next year. This is the logic that they have. Okay. Now what is going to happen now here? If I say that now, this is the raw material, work in progress, finished good, it's unsold good that you have at the end of the year. It is an inventory, it is an asset. But they say that point number D is stock in trade. What is the difference between finished goods and stock in trade? What is the difference here between finished goods and stock in trade? Now understand this point. When I say finished goods right here now, what is going to happen in case of finished goods? This is the goods we have actually manufactured. It's say already we have manufactured them, but this is the goods that we have manufactured. Okay. What is stock in trade? It is not necessary I am a manufacturing company. I might have purchased the goods from somewhere. I will sell it at a higher value. So that I call them stock in trade. In respect of goods acquired for trading, we purchase something and I will sell it at a higher value. We call them stock in trade. Okay. Or any other goods like damaged goods, that whatever inventory we have, we specify here under the inventory. It is very simple here. Okay. Now you understand the concept of that I mentioned you about the expense that here. What is this income? We have not yet come to the income statement, this profit and loss account that talks about the income and expense. But I am to record the expense in my P&L account only those expenses which we have incurred to generate the revenue. If you have total 100 quantity, you sold only 80. So why you want to record the expense for 100 quantity? The relevant expense for the 20 quantity should be removed from the P&L account and they will write it down under the asset side here. So that's why if you have ever prepared a trading account in your life, then this is for you. Otherwise, don't worry. Okay. If you have no background in the trading account, all that, don't worry. I'm just giving an example. So suppose I have a P&L account. I have recorded the expense of 100 quantity. But out of 100, 20 is unsold. So I will say 20 is unsold. But I record expense for 100. So expense of the 20 units, I take it and I throw it from the P&L account to the balance sheet, to the asset side. Because that 20 unit expense that I've recorded in my P&L account, this is not expense for the current year because which is unsold at the end of the year. So what I will do that, I will throw them from the P&L account and I will tell them, go to balance sheet. Don't come here. You're an asset. We have not yet sold to you. You're not an expense for the current year. So go from here, go to balance sheet. That's why you transfer the closing stock from P&L to balance sheet. This is the logic behind that. Okay. Now, if I come to balance sheet here, you can see that here now is the trade receivable. Let me tell you honestly about the trade receivable that here. First of all, when I talk about the trade receivable that here, they give you the table that here. But no need, I will read it for you that here. But they are not going to ask you question on this. Let me tell you honestly. All the question in IC study material that is, how they will ask you, let me tell you that here. They will give you the bifurcation, okay, which is mentioned in this rapid gist book. There is a table there further for all these adjustments. I am going to discuss all these adjustments with you. I will discuss with all these adjustments with you later on that here, okay. But understand that here, what is going to happen that here now, this trade receivable basically they tell you, they will give you a question that there are certain trade receivable which is due for more than 6 months. There are certain trade receivables. Certain people call him debtors, certain people call him debtors, whatever is that here. So if I call it debtors, okay. Now when I say debtors that here, if it is receivable more than due date crosses it is receivable more than 6 months, so I have to bifurcate that here. More than 6 months, another. Suppose they give you the trade receivable of 10 lakh rupees and they give in the information, additional information. Out of this 10 lakh, 6 lakhs is received due for more than 6 months. When they tell you the due for more than 6 months, we have to bifurcate there. More than 6 months, 6 lakhs, other will be the 4 lakh. Okay, but don't worry. All these adjustments when I will solve question. Okay, when we are going to solve the question. Okay, this is question number 1. You know what I do? All these adjustments I will read one by one that now. At the same time, I will connect with this concept book and all these adjustments written at one place. So it will be easy for you to do the revision later on that here. And I will explain you each and every adjustment from here. Okay, don't worry for that. But what they tell us that here now in schedule 3, but it is mentioned that here now is no need to read it. Oh, sorry, no need to learn it. Just I'm explaining it and ignore that. They're not going to ask you on that. Okay. But they say that here now, two things is that what it mentioned is that here now is the undisputed 2 times, but undisputed consider goods, undisputed consider what? Doubtful debt. Then they have here, then they have disputed 2 times. Again, consider good and consider doubtful. So they want us to bifurcate the trade receivable. Let me write it down. They want us to bifurcate trade receivable into 2 categories. First is what is undisputed and second is what? Disputed. Okay, undisputed and what? The disputed. Now understand this point here. Undisputed, again they divided into 2 categories. Further divided. How they divided it here is considered good, considered doubtful. Same here, considered good, considered doubtful. Okay, to understand this point, what does it mean that? They see that now this is a trade receivable that I have. Okay, what do you mean by undisputed? There is no dispute on that. We sold the goods, amount is receivable from them. But what happened that now? That will come in mind. Good, it's okay that. Consider good, it is normal. But if it is undisputed that here now, how that can be doubtful? I sold the goods to someone. There is no dispute in the goods. The goods are not a damaged good, nothing like that. But I know that here, that debtors is in a financial problem that here. The debtors is in a financial problem. He might not give me some amount. I have some doubt. Okay. I don't have a dispute with them. But I have a doubt. They might not give me some amount because his financial position is not good. You got the point? Now I am coming to the point of disputed. You will tell me, okay, dispute means some dispute like the damaged goods. But if a dispute is going on that the goods is damaged, sir, but it is considered good, how it can be possible? If it is, I mean to say that if goods is, if it is disputed, I have some dispute with your debtors and for example, the goods are damaged that here, but how the amount is recoverable still might be mentioned in contract that he will pay the amount. He will pay the amount once goods are sold. I'm just giving an example that here. It is mentioned in the contract that here. He is going to pay you once the goods are sold. Then I will say that you accept the contract when the goods title has been transferred to you, have to pay to me. Dispute is going on, not there are some damage. Okay, dispute is different thing. But it is mentioned in the contract you are going to pay me. So disputed, but it is considered good. It is something not normal. It is something which is not normal. Okay. Anyways, dispute and it is considered doubtful. That's logically that is good that it is. I have dispute and I have a doubtful that he will not give me the amount. But let me tell you honestly. Okay, first of all that here we have to bifurcate all these amount into if it is due within less than 6 months, outstanding for payment from the due date of payment, less than 6 months, 6 months to 1 year, 1 year to 2 years, 2 years to 3 years, and more than 3 years, and then 12, and then total. Let me tell you, no need to learn it. Just ignore. I ignore me, just understand and just leave it that here because they will never ask you this. That I know that here. Okay, just understand this is the format as per the schedule 3, but they will give you very simple in all the question at IC study. I know how they ask. How much is due for more than 6 months and less than 6 months? That's it. They will ask you like that only. Okay. Now, When I go there, now the next item is cash and cash equivalent. When I say cash and cash equivalent means something, I have cash and something which we have what cash equivalent also. Okay, something similar to cash. Like we have cash in hand, cash with bank. You know what they ask you? How much bank balance you have with scheduled bank and other bank. So they will mention in the question that here, this much of bank balance you have, total bank balance, let's say 10 crore. But you have with scheduled bank 6 crore. So we have to mention them. The 10 crore, we have to give the bifurcation 6 crore with the scheduled bank and 4 crore with the other bank. Okay, this is important. Okay, like that. Now, they want a bifurcation of scheduled bank and the other bank. Then they ask you that here now is the next is short-term loans and advances we have given. Notes to account number 15 that here. Okay, short-term loans and advances. If you have given to anyone that here now is loans and advances to related party to subsidiary. I told him give me the amount within 6 months. We gave the advance, but he's going to repay me within 6 months. Okay, or any other advances you have given that is going to be settled within not in within 1 year that is going to be settled. We call them short-term loans and advance. If any security is given, the secured or unsecured, we have to bifurcate. So this is all about the balance sheet that here. Okay. And the last one is other current asset. If nothing is mentioned, okay. If nothing is mentioned, okay, about if nothing is mentioned about any item, there is no separate heading for any item. Okay, like for example, other current asset, interest accrued. I'm saying receivable, interest receivable. So that is an asset, that interest receivable I'm saying. No separate heading for that here. Okay, that will come under current assets. So if there is no separate heading, that will come under other current asset. So the point that I've highlighted here, even also we don't write it down, the current asset also we don't write it down. Okay, the point that I have not highlighted, all we are going to write it down when we prepare balance sheet. Remember this here. Okay, now what we'll do that now, we'll take a break for 10 minutes right here now. And after that, we'll do the quick revision of whatever we have covered till now, and then we'll solve one question on it. Okay. So now we'll take a break for 10 Hello, all of you. Okay, now we'll do a quick revision what we have covered till now. Now, when we prepare balance sheet as per Schedule 3, now we'll write it down here: equity and liability, shareholders fund. What we write it on shareholders fund? Share capital, reserve and surplus. Okay, these items no need to write it down when we solve question. So shareholders fund, share capital, reserve and surplus. Non-current liability, only long-term borrowing. Current liability, short-term borrowing, trade payable, other current liabilities and short-term provision. Then here asset side, non-current asset, only three items: PP, intangible and non-current investment. Current asset, then inventories, trade receivable, cash and cash equivalent, short-term loans and advance and other current asset. Okay. Now, important thing to note that in share capital, if any share that we have issued other than cash, we'll show them in inner column separately. And reserve and surplus, if I have a loss, I will show it as a negative figure. Even in outer column, also the negative figure is coming. No problem in that. Okay, remember this. Now, what should be the approach when we'll solve question that here? Okay. Now, you have to remember these part here. Now, they will give you a trial balance. They will give you trial balance question like we are going to solve now. The question number 1 that here. Remember that here you have to take this question bank part 1. Okay, part 2 will come later on. Those part 2 is on the accounting standard. Okay, so question bank that here now, the part 1 that you have to take that here. Okay, the question bank part 1, we are at the chapter number 1, question number 1. Okay, now what they will do that here now, they will give you this trial balance. Here in this trial balance, asset, expense, income, liability and capital, they write it down. If they ask you to prepare P&L account and balance sheet, both that here. But they will ask you now, they will ask you only for the balance sheet because we are solving initially the question of balance sheet. So when we solve the question, you will see there in balance sheet, asset, liability and capital, these three only, asset, capital, liability and capital. All asset you will write it down in balance sheet on asset side, depends, that might be a non-current asset and that might be a current asset. Liability you will write it down that here. Similarly, liability might be a non-current liability and current liability. And this capital, basically it's a shareholders fund, so we'll write it down shareholders fund. Okay, just shareholders fund. Now under shareholders fund I have share capital, reserve and surplus. Under the asset we'll write non-current asset, current asset. Under the non-current asset I have PP, intangible, non-current investment, like that. Okay, current asset, inventory, trade receivable, cash and cash equivalent, short-term loans and advances, and other current asset. Non-current liability, only long-term borrowing. Current liability, that here short-term borrowing, trade payable, short-term provision or other current liability. So simple. Okay, so they will give you this and they will ask you to prepare this balance sheet here. Okay, now when it's come to the additional information, like that you can see it in question number 1. So in question number 1, this is trial balance. I will discuss with you each of them that now, and what should be the approach, I will explain you that here. What should be an approach to solve the question, that I will explain you that here. Okay, but they will give you this additional information. I will discuss each of them with you, but this additional information might be related to adjustment or disclosure. If it is only related to disclosure, we have to disclose them as per the schedule 3. Whatever they tell us to disclose, we will disclose them. If that is related to adjustment, then we have to do the adjustment. But don't worry, imagine that we have not yet discussed, even though some disclosure point I will discuss with you, like issue of shares other than cash consideration. Okay, even though we have not yet discussed anything related to additional information, don't worry, we will solve this question. When this additional point will come, I will discuss each of them in detail with you. I am to discuss each of them in detail with you that here. At the same time, to make it simple for you, in my concept book that here now, all the adjustment given at what? One place that here. You can see that here now, additional information given in question. They might be related to disclosure. You can see that it's a rapid gist, page number 9. They might be related to what? Disclosure that here, or they might be related to adjustment that here. So you don't have to worry when the question will come. I will explain you that, okay, this point is related to adjustment. What does it mean? What should be the effect of that? Each and every point I will discuss with you. Now what we'll do that here now come to question number 1. And I hope that you have a proper notebook of 300 pages now. Okay, now I will solve, obviously this is my notebook that here, I will solve here. Okay, I will start my questions from here. Okay, now you are going to solve in your notebook that here, make a proper notebook of advanced accounting. Okay, and there is no separate notebook you are going to purchase for homework. In the same notebook we will solve class question, and homework question also will do in the same notebook. Okay, and you know that at the end of the chapter I will give you the important question of the chapters. Then you are going to write it down in LME, this last minute mastery question that here. Okay, and at the time of review you are going to refer only these questions. That's it. Very simple, very simple to score 80 plus in advanced accounting. Very simple. Okay, now come to your question number 1, and this is a question bank book number 1 it is. Okay, now come to question number 1 here. Yeah, this question basically that they have also asked in the IC study material that here, and the mock test paper May 2025 and onwards. Basically in 2025 May they issue the mock test paper, and they have a total 8 questions are there. So this is the reference in question number 1 is it is in actually IC study material, and the mock test paper, the May 2025 onwards, they give the title to that mock test paper series, and there are total 8 papers in that. This is in the paper number 7. Mock test paper 1 September 24 and mock test paper 2 Jan 2025, and this question is on balance sheet. So I will tell you that here what should be approach, that how to solve the question. IC ask for these questions, they ask for 14 marks, single question for 14 marks they ask in examination. Okay, now from the following particulars furnished by Alpha Limited, prepare the balance sheet as on 31st March 2017 as required by part 1. So what is it in what covers in part 1? We cover in part 1 balance sheet. Okay, part 1 schedule 3 of the Companies Act. So they ask us to prepare only balance sheet. Okay, now remember that here now These are the debit balances that here now, and these are the credit balance. I told you that here asset has debit balance. Okay, always this debit, and here liability and capital, or you can say that equity part. Okay, that is the shareholders fund, reserve and surplus. All those have credit balances. So equity share capital face value of rupees 100 each, 50 lakhs. Costs in arrears 5,000. Land and building 27 lakh 50,000. Plant and machinery 26 lakh 25,000. Furniture 2 lakh 50,000. General reserve 10 lakh 50,000. Loan from State Finance Corporation 7 lakh 50,000. Inventory, two types of inventory. Raw material, that is 2 lakh 50,000. Finished goods 10 lakh. Total is 12 lakh 50,000. Provision for taxation, that is 6 lakh 40,000. Trade receivable 10 lakh. Short term advances 2 lakh 13,500. Profit and loss account 4 lakh 33,500. Cash in hand 1 lakh 50,000. Cash at bank 12 lakh 35,000. Then unsecured loan is 6 lakh 5,000. Trade payable for goods and expenses 8 lakh. And loans and advances from related party 2 lakhs. Okay, these are trial balance. They have not tallied it here, but trial balance always should be the tally. Okay, anyways. Now the following additional information is also provided. Now understand this, what they have actually, what they have given you here in question, they have given you this trial balance that here. Now they're talking about the additional information. I will discuss with you each of these additional information, but what is important to note that now, always give the references in trial balance that here. So it will be easy for you when you solve the question. Example, point number A says that 10,000 equity share capital were issued for consideration other than cash. I will explain you each and every point here. But the first point is related to equity shares. So you can write it down in equity share capital. Something is given in point number A. Just write down there A, okay, in your book. Then trade receivable of rupees 2,60,000. Something it is related to trade receivable. Okay, trade receivable. So of rupees 2,60,000 are due for more than 6 months. So trade receivable they have given in point number B. Something is given in point number B. I will explain your point. Just give the reference there in trial balance. Now the cost of the asset were building 30 lakhs, plant and machinery 35 lakh, and furniture is 12,500. So something about these PP that here, that they have all these item of these property, plant and equipment. Something that they have mentioned in notes to account number, not notes to account number, point number C. Okay. Then here, this is related to the cost of the asset PP. Then they see the balance of rupees 7,50,000 in the loan account with State Finance Corporation is inclusive of rupees 37,500 for interest accrued but not due. And the loan is secured by the hypothecation of plant and machinery. Something is mentioned about this loan that we have taken. So it is mentioned in point number D. Point number D. Okay. Now here in point number D. Okay. Now they say that now balance at bank include rupees 10,000 with Omega Bank Limited, and which is not a scheduled bank. So something about the bank balance is mentioned there. So go to trial balance and see their bank balance. Yes, it is mentioned in point number E. Something about it. Okay. Then transfer of rupees 20,000 to general reserve is proposed by the board of directors. So something about the general reserve that they have mentioned. Is there any general reserve here? Point number F. Is there any general reserve is given here? Yes. So you can write it down here, point number F, like that. Okay. This should be your output. So first you will read the question that here now, and all the additional information. Give the references in trial balance that here. Okay. Then they say the board of directors has declared a dividend of 5% on the paid up capital on 2nd of April 27. I will discuss with you these points, and we are going to discuss about these points at the end. Okay. So let me highlight it with some other color. I will discuss these points at the end. Okay. Now every time that here, the problem that you're facing that here, we will draw the format of balance sheet, and don't worry, it will take 2-3. After 2-3 questions, you will be familiar with the format of balance sheet. That is not a big deal at all. So, but when you draw the balance sheet, the challenge you will face that here, which notes to account we should prepare. So you will tell me, sir, in the class when you discuss the format of the balance sheet, there are total 15 notes to account. Does that mean that we have to prepare the 15 notes to account also here when you solve the question? No. This is just for the reference purpose. Maximum you have to prepare 15 that. But on the basis of information that they have given to you, that you're going to decide which notes to account we have to prepare. And let me tell you honestly that it might be happen when I decide or when we discuss that here, which notes to account I have to prepare. It might be happen I have decided 10 notes to account that here. But it is not necessary that here you may decide 11. Certain time I may decide 10, you may decide 8, 9. So it is not fixed at all that it should be a 15 means 15. No, it depends on the type of information given in question. Or it might be happen when you are going to decide one or two, it might be here and there, it might be happen, no problem in that here, okay? But how to decide, I will tell you the approach that here. And when you will solve the homework question, before looking at the answer, first you have to decide what work, I'm just saying which notes to account we have to prepare. So once you have decided that, then you are going to draw the balance sheet and you will give the space for all the notes to account that here. So let's decide that here. So which notes to account we have to prepare and how to decide it, let me explain you. First of all, that here now, okay. First of all, always remember that 4 notes to account, anyhow you have to prepare in each and every question. First is, I'm not giving the number, I'm writing just share capital. Always share capital. Then here, reserve and surplus, always you have to prepare. Then long-term borrowings, okay, I'm keeping some space there because I will add some more notes to account. And then PP, these 4 notes to account, always it is going to come. Always these 4 notes to account, we are going to prepare in question that here, okay. Now how to decide about the others? Now go to the adjustment there. You can see that something is mentioned about the capital. So yes, we have prepared the share capital notes to account, perfect. In point number 2, they mention something about what? The trade receivable. They mention about the trade receivable, okay. So we are going to prepare the trade receivable. So I will write it down here, trade receivable, because these are related to shareholders fund. Then these are related to liability. Then, okay, shareholders fund. Okay, just give me a minute. Shareholders fund, liability, and then here I will prepare. Is it visible? Yes. Asset. Okay. Now, why we are going to prepare the trade receivable? The reason is that here now, because that there something is mentioned about a trade receivable. The cost of the asset, they're talking the PP. Yes, we have already prepared for the PP. Then here, the balance of rupees 7,50,000 in the loan account with the State Finance Corporation. It is related to the long-term borrowing, and we have already prepared the long-term borrowing there. Okay. Now here, it says the balance at bank include rupees 10,000 with Omega Bank Limited, which is not a scheduled bank, something related to the bank balance. So we are going to prepare here the cash and cash equivalent. Okay, cash and cash equivalent. Okay. So one notes to account will be on cash and cash equivalent. Let me write here cash and cash equivalent. Okay. Now point number F is related to the general reserve and surplus. Basically, that is a part of reserve and surplus. So we have already prepared the reserve and surplus. So when you are going to decide which notes to account we have to prepare that, remember that now first you have to write it down 4: share capital, reserve and surplus, long-term borrowing, and PP. And then you have to go to the additional information. On the basis of information that they have given you, additional information, we are to decide which notes to account we have to prepare that. Okay. Now, what you have to do that now after this, remember that it is not necessarily only these. Okay. You just have to go to these trial balance as well. So as you can see that here now, if they give you here on inventory, the different types of inventory that they have given you, you can see that here now is the raw material that here, okay, raw material and finished goods that here. So inventory, that is a part of the current asset. So we will write it down here, inventory. We are going to prepare on inventory. Okay. Now here, if I say that, okay, inventory, 2 types of inventory, we are going to prepare on inventory. Then the provision for tax is a short-term provision. So you can prepare on notes to account on short-term provision that here. Okay. No, generally, these 5 is almost in every question you are going to prepare. These share capital, reserve and surplus, long-term borrowings, short-term provision, PP. Almost in every question, these 5 is fixed that here. Okay. Short-term provision also. Then here, when you decide that here now, is that here short-term provision, trade receivable that here, then trade receivable, okay, short-term advances, cash in and trade payable, loans and advances from related party. Okay, now understand this point here. When I go to these, the point number D that here, I will explain you that here now. Certain portion that they talk about the balance of rupees 7,50,000 in a State Finance Corporation. Some portion belongs to the interest portion, which we are going to pay within a year only. So basically these portion they are talking about this interest part. Basically they are talking about the other current liability. They are talking about what? Other current liability. So the interest portion that here, when we talk about the 37,500, they are talking about other current liability. I will explain you the adjustment, don't worry. So we may prepare on other current liability that here. Let me write here other current liability. Okay. Or is there any need that here for any more adjustment that here? No. Is there anything that they have mentioned about the loans and advances from related parties? Depend that here. Okay. I will explain you why. We have prepared how many total that is? 1, 2, 3, 4, 5, 6, 7, 8, 9. 9. Okay. These 5 are fixed. Inventory, how we have decided on the basis of information that they have given raw material, finished good. Trade receivable adjustment was there. Cash and cash equivalent adjustment was there. And on other current liability also adjustment was there. Okay. So on the basis of that, we have decided these notes to account we have to prepare. But one more thing, not necessary. 9 is enough that is. But what happened? Here that they have given loan and advances from related party. So when it's say loans and advances from related party, it's a liability. And they have given the credit balance also. The liability has a credit balance, this is a liability. But that they have not mentioned whether it's a long term or short term. So we have to take assumption that here because they have not specified that here. So we'll assume that's a short term. Okay, if we assume that's a short term that here, then we have to prepare on short term borrowing also. Short term borrowing, not necessary. These you can directly write it on a short term borrowing. No problem in that. No need to prepare notes to account. But that's why I'm telling that here. It is not necessary if I have decided 10. And if you don't watch the lecture and you yourself, if you decide, it might be you decide 11. It might be up to 8, 9. It might be happen that year. Okay. But it might, but we have to judge how many notes to account we have to prepare. But you approach, you should know. So first 5 are fixed that year. Share capital, reserve and surplus, long-term borrowing, short-term provision, PP. Fixed 5. Then you have to go to additional information. On the basis of that, we have to decide which notes to account we have to prepare. And we have to go through these trial runs as well. That you will get certain points like the inventory. They have given the bifurcation here. So on the basis of that, it will help you to judge which notes to account we have to prepare. So how many we have decided here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. Okay, now it is not as per law. There's nothing in law that say, no, you have to prepare this 10, 12. No, no, no. We have to decide which notes to account we want to prepare. But you should know the approach here. Okay. So whenever you solve the question that here, what should be your approach that here? Okay, as it is first question, I'm explaining each and every point. You have to, in every question I will explain it, but be careful in first question that, okay? So what should be your approach that here now? First, you have to decide that here, read the question. Then give the numbers like A, B, C, D, the references that I have given. Give the references there. Then give the reference from after reading the additional information, and then you have to decide which notes to account we have to prepare. How to decide but which notes to account we have to prepare? So you will first prepare for, I mean to say first write it on roughly somewhere on question paper anywhere when you solve the homework question, write it down in the question bank on question only that, okay? That 5 share capital, reserve and surplus, long-term borrowing, short-term provision. First we decided 5. Then you will read each and every point. Accordingly, you will add on the basis of additional information. You will write it on notes to account. And then you go through with the trial balance. If you find some information like the 2 types of inventories given, make a notes to account on that like that. Okay. So now you should have a proper 300-page notebook. And okay, now we will write it down that here now is question number 1. Write down there now question number 1. Question number 1. Okay. Now the way I am writing exactly you have to write it down like that. Write down here Alpha Limited. Alpha Limited. Give the name of the company. Balance sheet as on 31st of March. 31st of March 2017. Okay. Now draw okay, now draw there okay, now draw there note amount. Okay, write down your particulars. Okay, particulars, note amount. First write down there now equity. Draw this for one page. Equity and liabilities. Equity and liabilities here. First, shareholders fund. Shareholders funds. A point. Okay, shareholders fund. A point. Reserve and surplus. Sorry, A point share capital. B point reserve and surplus. Okay, reserve and surplus. Now, non-current liabilities. Okay, non-current liabilities. What we write it non-current liabilities? Only long-term borrowing. Write down non-current liabilities. A long-term borrowing. Long-term borrowings at it. Okay. Then here, third point, current liabilities. Current liabilities, write down there. How many points at? 4. Short-term borrowing, trade payable, other current liabilities, and short-term provision. So A, B, C, and D. Short-term borrowings. Trade payable, then other current liability. Okay, other current liabilities and short-term provisions. Write down short-term, the provisions there. Okay. Then here, total. Then asset. Assets. Write down there in on asset side here. Non-current asset. Non-current asset. Just write it down A, B, and C only. Okay. Non-current asset. Property, plant, and equipment. Intangible. Okay, intangible. And you can write it down here non-current investment. Non-current investment. Okay. Then here current asset. Current asset. Okay, current asset. Write down there. First A, B, C, D, and E. Inventories, trade receivable, now cash, and we have cash and cash equivalent. Okay, write down cash and cash equivalent, short-term loan and advances, other current asset, other current asset. Okay, then here total. So we have to write it down here, all the items in balance. This is how every time you have to prepare balance sheet, like that only. Okay, now we have decided which notes to account we have to prepare. We have already decided. So here first is share capital, second, okay, share capital notes to account number 1, then reserve and surplus notes to account number 2, long-term borrowing notes to account number 3, then is short-term borrowing, okay, other current liability, short-term borrowing, other current liability, and short-term provision. PP is notes to account number 7. Then we have inventory, trade receivable, inventory, trade receivable, and cash equivalent. So is it necessary that if I have decided 10, you may decide 11, 9, it's okay. Okay. Now but you should know how to decide it. That is important. On an average, in every notes to account, keep the space of 5 lines. Okay. Now below the balance sheet, now we'll start writing down notes to account. So write down there notes to account. Notes to accounts, write down there notes to accounts. Number 1, share capital. Keep the space of 5 lines. 2, reserve and surplus. Just in reserve and surplus, always keep more space, 6, 7 lines, because there are more items, adjustment might become there. Okay, so keep this space of 5, 6 lines. Then 3, long term borrowings, 4, 5 lines. Now 4th here, short term borrowings, or on an average 4, 5 lines. Then 5th one is other current liabilities. Okay, other current liabilities, done. Then 6th is on short term provision. Okay, now other current liabilities, now write down there. Okay, next one, 6th, short term provisions. Now space of 3, 4 lines. 7, property, plant and equipment. Property, plant and equipment. Now 5, 6 lines. Then here 8, inventory, then trade receivable, and then here we have cash and cash equivalent. Cash and cash equivalents. Okay, okay, done. 10 notes to account. Now we have drawn the balance sheet. When we have prepared, draw all the notes to account. Now what should be our approach now that here? Now what we'll do that here, we'll go to the question one by one. Okay, and I will tell you that here now where should we write it down. For a reference, there is first question, you can write it down. Now first they say equity share capital, face value rupees 100 each, 50 lakhs. So we can find it out the number of shares here. How much amount is we have here, beta? 50 lakhs divided by 100. So 50 lakhs divided by 100, how much is coming? 50,000 shares of rupees 100 each. But something is mentioned in point number A, we'll go there, don't worry. So where it will come? It will come in share capital. Okay, go to share capital, write down there. Note, as they have not given the authorized capital to us, so we'll not write it down authorized capital. If they give us, then we will write it down. So write down here now 50,000 equity shares of rupees 100 each. If they give you authorized, then only we'll write it down. Okay, that is your 50 lakhs. But something is mentioned about this equity share capital in notes to, in point number A. So we'll go to point number A, and they mention that 10,000 equity shares were issued for consideration other than cash. So other than cash, how many shares we issued? 10,000. So you know that here what says schedule 3, we have to mention it that here. Okay, so in an inner column, just write it down. You can say out of the above 10,000 equity shares issued other than cash consideration. Out of the above 10,000 equity shares issued other than cash consideration. That is just for the disclosure purpose. Okay, Then here, now come here, cost in arrears. I told you that here it will write it down in share capital, will show the deduction in share capital. Okay, I told you that 5,000. So go to share capital, write it down there, less cost in arrears. Write it down in brackets in negative figure 5. We'll do the total later on that day. Okay, 5,000. Then we have here land and building. It is related to PPE, but something is mentioned in point number C. I will read there. What is the point number C? They say in point number C the cost of the asset. No, understand, very interesting. They have given us the cost. You know that here. Let me write it down. Cost, okay, whatever the cost minus whatever I'm writing it, you have to write it down in your question bank, in your book, okay, minus accumulated depreciation. Cost minus accumulated depreciation, whatever figures come, we call them WDV. Now please understand this point, okay. They have given me an additional information, the cost. It means this they have given additional information. But in trial balance, they have given something, land and building, they have given 26 lakh 50,000. Here they have given me building 30 lakhs. So understand this point here. Now, when I am to prepare the balance sheet, obviously whatever figure which is appearing in my trial balance, only that is going to appear in balance sheet, because we have to take the figures from trial balance only. But this figure is going to appear in balance sheet. Please understand that here. This is going to appear in balance sheet, no doubt about it, which is given in trial balance that here now. Okay, this is going to appear in balance sheet, no doubt about it. But they have given in this also that they have given in information, in info that they have given this. So why they have given this? To give to when we prepare our notes to account, to give more information. So this much was the total cost that they have given in additional information, and they have given this also. So they have given me the cost in additional information, that they have given me WDV. WDV is the book value, written down value. Okay, the book value in trial balance. So this value is going to appear in balance sheet, no doubt about it that. But why they have given me the original cost? So when I am to prepare the notes to account, we will make in detail. If you remember that now, we discuss it that here. In that PP that they say that they will reconcile the gross and the net. If they give us the total cost that here, so I will mention like that when I will prepare the notes to account, that this much was the total cost. This is the WDV, and this will automatically will come as what? Balancing figure. So this is just for the information purpose. I'm telling you that here. This will appear in balance sheet, no doubt about it. But they have given this figure me in additional information. So I will explain like that. This is the total cost. This is the accumulated depreciation will come as a balancing figure, and this is the WTV. Okay. So these two figures we know. These two figures we know, which I have highlighted here. The third one will come as a balancing figure. Okay. Then, so this is for the additional information, so that the users of financial statement will, oh, this is the original cost, this much of depreciation that they have charged till date, and this is the book value that they have. Got the point? Okay. Now, where this point will come, it will come in PP. So we prepare the notes to account on PP, notes to account number 7. Write down there. The way I'm writing, just write it down. I will explain you. Write down there now. Asset. Okay, write down there. Asset. Then write down their cost. Then accumulated depreciation. Then you written down value. Written down value. Okay. Now understand this one. Write down one by one each of them. Land and building that here. Land and building. Then we have plant and machinery and furniture. Plant and machinery. Then we have furniture. Okay. Land and building, plant and machinery, and what? The furniture that we have. Okay. Now please wait. They have, this is the cost that they have given in point number C. So building is how much? 30 lakh. So I will write it down here, 30 lakhs. Then plant and machinery, 35 lakh. Then we have furniture 3,12,500. Okay. Now we have in a trial balance that they have given us this value. Land and building 27,50,000. Plant and machinery 26,25,000. And furniture is 2,50,000. Okay, remember that here now. This total will go to balance sheet, no doubt about it. It is given in trial balance. But this, for your reference, I am writing down. This is balancing figure, basically. This is balancing figure, okay? Now, we can find it out, yes. There's 30 lakhs is the original cost. Now, today the value is 27,50,000, 2,50,000. So, how we have find it out this 2,50,000? For your reference, I am writing down 1. 30 lakhs minus 2,50,000. Okay. No, sorry, 2,50,000, not sorry, 27,50,000. Okay. 30 lakhs minus 27,50,000. Okay. Now for second, 35 lakh minus 35 lakh minus 26,25,000. That is coming 8 lakh 75,000. 3,12,500 minus 2,50,000. That is coming 62,500. This is just for the reference purpose. So the user of financial statement will, oh wow, this is original cost, this is accumulated depreciation. He will not say, oh wow, okay, this is the original cost, this is accumulated depreciation, this is written down value. Obviously in balance sheet, this will come, okay, this because this figure is coming from trial balance. Whatever given in trial balance, that will appear in balance sheet. Okay, this is just for the information purpose. Okay, now come here. Now general reserve, it is a part of reserve and surplus, 10,50,000. But something is mentioned in point number F. They say, let's first write it down. Go to reserve and surplus. Write it down in reserve and surplus. General reserve. Write it down in inner column. How much general reserve that we have in trial balance, which is 10,50,000. So write down that here now. 10,50,000. Okay. But something is mentioned in point number F. They say, rupees 20,000 to general reserve, transfer rupees 20,000 to general reserve proposed by the board of director. So basically they tell us to transfer 20,000 to general reserve. Now the question will arise, from where should we transfer the 20,000 meter? From where should we transfer this 20,000? 20,000 is not mentioned. It is implied that from the profit and loss account balance. As here in this question, they don't ask us to prepare P&L account. That's why they have given, that's why they have given the profit that they should give the profit that, yes, they should give the profit that we have. So they already given us the profit, whatever we have. So they are saying us the profit from the profit and loss account balance, whatever the profit that we have, from that 20,000 should be transferred to general reserve. Now you will tell me, no, sir. It is not mentioned in point number F that 20,000 should be transferred from P&L account balance to general. It is implied from where you will transfer to reserve. From profit only, it is implied that we have to transfer from profit. So what we'll do that here now, in general reserve, I will transfer. So write it down, add, transfer from profit and loss account. Transfer from profit and loss account. Okay, transfer from profit and loss account. We have not yet write it on the balance of P&L, but we'll do it later. Now here write it down, profit and loss account balance. We'll write it on later on when in a sequence we'll solve a trial balance. But for a reference, I'm saying let's transfer to general reserve. Transfer to general reserve. So basically what I will do that now, I will transfer. For your reference, I can write it down right now also that here. This is going to be transferred from P&L account balance. So here I will deduct 20,000 and here I will add 20,000. You got the point? This is what they tell us in point number F or what F, yes. Okay, this is what they are saying. So this balance will write it down. It is given in trial balance, this amount also, the P&L account balance. Okay, write like this. Write down. Okay. Simple, very simple. It is the easiest subject you have. Don't worry for that. Okay, it needs practice and understanding first, then practice. Okay. Now, what happened that here? They say that a general reserve we have write it down 10 lakh. Okay. Now, loan from State Finance Corporation. Something is mentioned in point number D. Okay, but total amount is 7,50,000. When I go to point number D, they tell me that here now, and you know that all these adjustments which I'm reading here, it is already mentioned in at one place only in rapid this. So I will explain you each and every adjustment. We'll solve it after the completion of the question. We are going to do the revision from here also. All these adjustments. So it is at one place here. Don't worry. Now, they say the balance of rupees 7,50,000 in the loan account with the State Finance Corporation is inclusive of rupees 37,500 for interest accrued but not due. This loan is secured by application of plant and machinery. So they are telling us that now the loan amount which is appearing in trial balance, that out of the 7,50,000, 37,500 is payable in the form of interest. So something which is out of that 7,50,000, 37,500 is the interest amount. Interest accrued but not due. That portion is basically other current liability. We discussed it today. That 37,500 is nothing but a other current liability. So when I say that 37,500 is nothing but a other current liability. So what I will do that here, from the 7,50,000, we will write it on inner column, and it's a long-term borrowing. I will deduct 37,500 from them, because from these 7,50,000, 37,500 represent what? This other interest accrued but not due. That is nothing but other current liability. So we have to show like that. Okay. So what is this 7,50,000? Write down there. Is loan from a State Finance Corporation. It's a long-term borrowing. Let me write it down here. Long-term borrowing. Go to long-term borrowing now. Now, notes to account number 3. Write down. It's a secured, because it is mentioned that secured against the hypothecation of plant and machinery. So write down there secured. Do you remember that I told you that here secured and unsecured we have to bifurcate? Now write down there secured loan, you can see. Okay. Loan from State Finance Corporation, that is rupees 7,50,000 minus 37,000. You will tell me why, sir, we deducted? Because out of that 7,50,000, 37,500 represent the interest amount. That we have to pay obviously in 1 year. Interest accrued but not due. That is a part of other current liability. So for your reference, whenever I change the color, that is for your reference. It is other current liability. That's why. Okay. Now you can write it down. Amount 7,50,000 minus 37,500. That is coming as 7,12,500. Now we'll write it down 37,500 there, but write it down that here secured by hypothecation of plant and machinery. Okay. Now write down this 37,500 that here now in other current liabilities. So write it down here. Interest accrued but not due on loan. So write down there 37,500. You got the point here? Okay. 37,500. Write down there. Okay. Then we have, after this we have inventory. Inventory is inventory. It will go in inventory on asset. Okay. So write down is 2,50,000 raw material. So notes to account number 8. Write down there raw material. How much it is? 2,50,000. Okay. And then we have here is finished goods is 10 lakh. So inventory of finished goods 10 lakh. Okay, finished goods. How much? 10 lakh. Then we have here is provision for taxation is the short-term provision. Okay, so write down this 6,40,000. What is this provision for tax? It's a provision. It's a short-term provision, because provision for tax we have to pay within a year only. Okay, so write down in short-term provision. Notes to account number 6. Provision for taxation 6,40,000. 40,000. Okay. Then we have here trade receivable. Will go in trade receivable, but something is mentioned in point number B. What it mentioned that in point number B, how much trade receivable we have? The trade receivable we have, that is 10 lakh. Okay, remember 10 lakh here. But it is mentioned in point number B that trade receivable of rupees 2,60,000 are due for more than 6 months. Do you remember that I told you they will give information more than 6 months like that? So out of 10 lakh, 2,60,000 is due for more than 6 months. So we have to mention bifurcate more than 6 months 2,60,000 and remaining will show as other. So all these adjustment is going, we are going to revise from these rapidly. Okay. Now go to trade receivable. Write down there notes to account number 9. Outstanding more than 6 months. Outstanding more than 6 months. How much is mentioned? 2,60,000. But the total in trial means, when I see the total in trial means, how much is the total? 10 lakh. So remaining will show as other. So write down here other. How we find it out the amount of other, which is 10 lakh minus here 2,60,000. 10 lakh minus 2,60,000, that is coming 7,40,000. Okay, 7,40,000. Okay, done. So 10 lakh minus 2,60,000, that is coming 7,40,000. Okay, this is how we mention. Now, okay, have you written this? Okay, now next point. In next point says that now is short-term advances. So is it an asset or liability? So look at it that here it is mentioned on debit side. So who has the debit balance? Asset or liability? Asset is, come on, who has the debit balance? Asset is debit balance. No, yes, I am talking to you. Listen carefully. Yes, to you. 2,13,500, which is mentioned on, it is the debit balance which is mentioned that. Okay. All these are debit balances and these are credit balances. So it is what? It is asset. This is asset. Okay. So this 2,13,500. Why? Because they have a debit balance. Okay. Is there any heading here or something for the advances on asset side? Yes. Short-term loans and advances. So just write down this amount there. How much it is? 2,13,500. So here go to balance sheet that here now. Balance sheet. Okay. Now short-term loans and advances 2,13,500. Okay, 2,13,500. Okay. Okay. Now we have profit and loss account balance. You know why they give us the profit and loss account? Because they didn't ask you to prepare the P&L account. So already they have given the profit we have. So this profit belongs to the owner. That will go to reserve and surplus. 4,33,500. So go to reserve and surplus. Notes to account number 2. Write down this profit 4,33,500. Write down 4,33,500. Okay. Then we have here is cash in hand. Where it will go? Cash and cash equivalent. 1,50,000. So we'll go to cash and cash equivalent. Where is this? Notes to account number 10. Write down their cash in hand. Write down their cash in hand is 1,50,000. Okay. Now write down cash and cash equivalent. How much? 1,50,000. Then cash at bank is 12,35,000. But something is, it is also a part of cash and cash equivalent. But they have mentioned something in point number E. So what they have mentioned point number E, balance at bank includes rupees 10,000 with Omega Bank Limited, which is not a scheduled bank. So did you remember that I told you that here now, when we discuss about the cash and cash equivalent in RapidGIS, we have to mention balance with bank, how much we have with scheduled bank and with the other bank. So here you can see that now they have mentioned the 10,000 that we have with Omega Bank, which is not a scheduled bank. So that 10,000 will come, which is not a scheduled bank here, 10,000, and remaining will come here. Okay. So how much total I have? The total bank balance we have 12,35,000. Out of that, 10,000 belongs to some bank which is not a scheduled bank. Okay. So how will present? Like write down there cash. Okay. Cash at bank. How much total balance? Okay, first with scheduled bank. With scheduled bank, okay. Okay, then with other bank. Okay, with scheduled bank with other bank. So with other bank that they have given the name there, Omega Bank. It is mentioned that here how much it is with Omega Bank. We have bank balance 10,000. How much is the total which is given in trial balance? It is how much which is given in trial balance, which is 12,35,000. So I will write it down in inner column 12,35,000. So can we find it how much we have with the schedule bank? Yes, balancing figure. So you can write it down in inner column. 12,35,000 is the total bank balance and 10,000 is with the other bank. So here balance will come 12,25,000. Okay, this is how we have to present that. Okay, done. Okay, done. Now go to this trial balance. What is the next item that we have there in trial balance that here? Now over a period of time we have to increase the speed, because in examination speed is very important. You will find that so many people will tell you, no, paper was okay, not so difficult, not so easy, but very lengthy. So you have to improve the speed. Okay. Now, okay, it's okay. We slowly will go over a period of time, but you have to increase the speed. Now, unsecured loan. So some loan that they have mentioned the secured loan that here, and the unsecured loan. How much we have here? 6,05,000. So write down here in long-term borrowing that here now long-term borrowing. So write down long-term borrowing that here now unsecured loan. How much is the amount? That is 6,05,000. Okay, 6,05,000. Okay, unsecured loan is how much? 6,05,000. Okay, done. Then we have here trade payable. So trade payable will come in trade payable, no adjustment, 8 lakh. So write down in balance sheet here, trade payable, 8 lakhs. Okay, then we have here is loan and advances from related parties. So it is not mentioned that here. It is a liability, no doubt about. We have taken a loan, not we have given. It's a liability. But if it might be long term also, we have taken it from related party, like the subsidiary company. It's a holding company, for example, took a loan from the subsidiary company. So it might be happen that it is a long term borrowing. It might be short term borrowing. So we don't know. So something already that they have mentioned about the long term borrowing. So let's assume that it's a short term borrowing. So we'll write a note there. Write down there in short term borrowing note. So account number 4. Loan and advances from a related party. Write down there, amount is given there is 2 lakh. And write down there, assume, write down in bracket, assume short term borrowings. Assume what? Short term borrowings. You got the point? It is assume short term borrowing, because nothing is mentioned, but something about the long term already that they have given. So let's assume it's a short term borrowing only. Okay. Now we have written all the items of a trial balance. Now go to additional information. A, B, C done. D, E, F done. About the point number G, I will discuss with you, but it is not going to impact my balance sheet. So first, let's do the total of and all that, and we'll do the totaling of the balance sheet. I will discuss with you what is this point number G. Don't worry. Now, close down notes to account one by one. So here 50 lakhs minus 5 lakh, that is going to come 49 lakh 95,000. 49 lakh 95,000. Okay. Write down in balance sheet 49 lakh 95,000. Then we have here reserve and surplus. Write down the total and outside 10 lakh 50,000 plus 20, 10 lakh 70,000, 4 lakh 33,500 minus 20, 4 lakh 13,500. Total here that is coming 14 lakh 83,500. 14 lakh 83,500. Okay. Now write down in balance sheet 14 lakh 83,500. Okay. Then here is 7 lakh 12,500 plus 6 lakh 5,000. That is coming 13 lakh 17,500. Okay, 13 lakh 17,500. So write down here 13 lakh 17,500. Okay. Then here we have note stroke on number 4. If only one item, no need to write down the total, 2 lakh. So write down here 2 lakh. Okay. Then note stroke on number 5, 37,500. 37,500. Okay. If you have one item in note stroke, don't write down the total once again. Okay. Now 6 is provision for short-term provision, 6 lakh 40. 6 lakh 40,000. Okay. Then here beta, PP we have to do the total here. 27 lakh 50,000 plus 26 lakh 25 plus 2 lakh 50. That is 56 lakh 25,000. 56 lakh 25,000. So write down here 56 lakh 25,000. Okay. Then here we have inventory. Okay, inventory. How much inventory we have here is 2 lakh 50 plus 10 lakh, 12 lakh 50,000. So 12 lakh 50,000. Note stroke on number 9, that is 10 lakh. Okay, 10 lakh. Then we have here 1 lakh 50 plus 12 lakh 35,000. That is coming how much? 13 lakh 85,000. Okay, 13 lakh 85,000. Okay, done. We have done the total of all the notes token. We have write it down here. Okay, now do the total here. 49 lakh 95,000 plus 14 lakh 83,500. 13 lakh 17,500. 2 lakh 8 lakh 37,500. 6 lakh 40. That is coming here 94 lakh 73,500. Now asset side 56 lakh 25,000, 12 lakh 50, 10 lakh 13 lakh 85,000, 2 lakh 13,500, 94 lakh 73,500. Done. Okay. Now 14 marks. Okay. Anyways, now one point that I want to discuss with you, we will write it down as in here notes. What is this point number G? Now remember that. This is one accounting standard will come later on that here, and basically it's a reference of the accounting standard. So I will not go to in that accounting standard. We'll discuss this point when the relevant accounting standard, basically it's accounting standard 4. But remember that what is that? I will tell you. I will explain the concept here. Then we'll write it down there. They say whenever company declared a dividend, we have to record in the books of account. Just listen carefully. Whenever company declared the dividend, we have to record the books of account only in the financial year in which they declared it. Only in the year in which they have declared it. So what does it mean? As you can see that in point number G, Board of Directors has declared a dividend of 5% on the paid up capital on 2nd of April 2017. So we are preparing balance sheet on 31st of March 2017. Now understand what does it mean? Okay. So at the end, we have to write it down one note. So we'll write it down a note, but you have to understand the concept here. Now my balance sheet is of 31st of March 2017. Okay. They declared dividend on 2nd of April 2017. Declared dividend. Now what happened? This accounting standard will come later on AS4. What that accounting standard says that here, first of all, understand. Suppose the balance sheet date is on 31st of March only. But what happened? It is not necessary we are going to finalize the books of account on 31st of March. The balance sheet date position is of 31st March only. But it will take time to finalize the books of account. So suppose here on 30th of June 2017, you approved financial statement. Basically, this is the date when you approve the financial statement. Okay. So what happened? We will discuss in AS4 that any event happened that year. So there's some treatment of it. I will not discuss those treatment right now that because it's part of the AS4. Okay. But specifically for the dividend that they have mentioned that now, even though, because you just have to focus on one thing when they have declared the dividend. If they have declared the dividend, just remember the date. In suppose the 2nd of April, it is coming the financial 17-18. So it will record in 1718 only. Remember that here, okay? But books of account is not yet finalized. It's okay. So what happened that now? So what is going to happen now? Dividend declare. So let me write it down here, the two. Now, first mention in notes to accounts. Write down like that. Okay, this okay. Mention in notes to account and accounting. So remember that now, as per that. Okay, remember that now. Okay, this mention in a notes, so because the books of account is not yet finalized that here. So we'll mention in the notes to account that we have declared the dividend in financial year 2016-17. Financial year 2016-17. When we prepare the financial statement, we'll mention in notes to account that we have declared. You will say, no, sir, we declared on 2nd of April. I know we declared on 2nd of April, but financial statement not yet approved that year. So before the approval, we know that we declare the dividend. So it says we just have to declare in the notes to account. We have to just mention in the notes to account that we have declared the dividend. But when we'll do the accounting, obviously, when we'll give the dividend, when we'll do the accounting will do in next year, 16-17. Okay, financial year. So always remember that here now, you just have to focus on date when they have declared. And in that particular financial, we will do the accounting of that. Okay, but if the books of account not yet finalized of the previous year, just mention in the notes to account. So institute always, okay, institute always, most of the time, they give you these, most of the time basically, they give you the information that here now, that the company has declared the dividend that year. Most of the time, they will tell you that a company has declared the, just give me a minute now. Okay, company has declared the dividend that year. Okay, so that date generally is after the balance sheet date. Here only, after the balance sheet date only it will be happen. Okay, but might be question might come in what happen if the balance if they declare on the balance sheet date. So one question will come. I will discuss later. But remember that here, if what is the date of the dividend that they declare? April, which is after 31st March. Even though the books of account is not yet finalized, I will mention just in the notes to account. And next year, in the next year financial statement or next year books of account, it is going to be recorded. Okay, you got the point here. Accounting, you can write in bracket record. Okay, now write a note because we are 31st March, so we'll write in note. Write it down. The note dividend declared. You can give the heading like that. Dividend declared. Okay, now write down there. Final dividends. Okay. Final dividends declared. Write down final dividend declared after the balance sheet date, but after the balance sheet date, but before the approval of financial statement, before the approval of financial statement, okay, are not recognized on the balance sheet date, are not recognized on the balance sheet date. You can write it in a bracket, that is 31st of March. That is 31st of March 2017. Okay, are not recognized on the balance sheet. That is 31st March 2017 in our example. Okay, now write it down. They will only be recognized on, they will only be recognized. Recognize means recording in the subsequent only be recognized in the subsequent period. You can write it down in our case financial year 2017, and it will only be recognized in the subsequent period, and their disclosure will be made and the disclosure will be made in the notes to accounts for the current year. What is current year for us? 2016-17. For a reference, I'm right. 2016-17 as per accounting standard. So if you see the institute answers, so as per the accounting standard, okay. So they have not given the reference of the accounting standard, but basically it is AS4. For a reference, I am giving AS4. Okay. No, don't worry what is AS4 and all that. Okay. So you got the point that here. So as per them that here, you have to see what is the date. It is in April month. It will record in the 16, 17, 18 next financial year. But 31st March balance sheet is not yet fine. This is hypothetically I have written this. Remember this. I will see that here. No, sir. 13th of June is not mentioned in question. How we have written 30th of June? And the hypothetically I have written that it is going to approve on 31st of June. Okay. So it is not yet finalized that here. So we know that we have declared the dividend. So just mention in the notes to account. Okay. You got the point? This is point number. Now, what we'll do that here? Now come to the rapid gist book that here. Come to page number there. Okay. Now come to page number here in a concept book, page number 9. You can see that additional information question that they have here, additional information given in the question that here. So first is you can see that equity shares, this is a disclosure point of view. Equity shares were issued for consideration other than cash. So what does it mean that we issue the shares other than cash? So what we have to do? Provide additional information in notes to account regarding the share capital issued other than cash. We just have to mention in the notes to account in share capital how many shares we have issued other than cash consideration. Second, they will ask you trade receivable of rupees XYZ are due for more than 6 months. So what we'll do that we'll write it down in notes to account of trade receivable due for more than 6 months and other. We have already discussed. Third, cost of asset given in additional information. We have discussed the point number C was there. Okay. So they will give you what is the cost of additional information, cost of asset. So we'll write it down in notes to account in PP. How much is the cost? How much is the WDV and accumulated depreciation as a balancing figure. Okay. Now, loan account is inclusive of interest due but not due. We have seen also this. I think the 7,50,000 was the loan amount, 37 something like that was the interest. So what we do? Interest accrued but not due. We write it down under other current liability, and these amount of interest remaining amount, or you can say the remaining amount we show under the long term borrowing. This is what we have done today. Okay, these remain. We write it on 37,500 in other current liability and remaining amount in long term borrowing. Okay, then here balance at bank include rupees XYZ, which is not a scheduled bank. So how we mention them here? We write it down in notes to account of cash and cash equivalent, how much balance which we have scheduled bank and how much we have with the other bank. Okay. Now I discuss with you that here, this one also that here, transfer of rupees to general reserve, which is proposed by the board of directors. So what we first effect, we have to give the two effect that here. First, what we get the first effect? We deduct from the profit and loss account balance in reserve and surplus. This is what we have done. Do you remember that we have deduct from? Okay, wait. Okay, we have deduct from here, here. What we have done that here now, we have deduct from here the profit and loss account balance. We add to the reserve that here. Okay, general reserve. This is what we have done that now. We have deduct from the profit and loss account balance in reserve and surplus. We add to the general reserve here. Okay, so simple that, and this is just for the reference accounting entry. If you're good in basics of accounting, this is just for the reference that here reserves has credit balance. Okay, so when we're transferring to increase in capital, it's a reserve is a part of reserve is a part of shareholders fund. Increase in that credit, decrease in that debit. So profit goes down. So we debit to P&L account, that P&L account balance, and general reserve increase. So we credit them. This is just for the reference purpose. Okay. These are the two effects that here. Okay. So we have done with the question number 1 that here. Okay. All the best. I'm going to say that here. I'm going to say there's no homework today, but all the best to, I'm going to say, saying to do the revision of whatever we have covered today that you just have to do the revision regularly that here. Okay. This, which is very important that now. It is you just have to, whatever we have covered, you just have to maintain a consistency that here. I'm going to tell you that here homework from tomorrow most probably. I will give you the homework to do certain homework that I will give from tomorrow. But today what you have to do that just you have to go through the balance sheet, that what we have discussed that here now. Go to the notes to account that we've discussed, and the question number 1, just go through that. I will give you homework. Don't worry. So many homework is going to come, but you just have to do the practice here daily. And whatever we have covered, revision is must do. And it is not going to take much time that here. 3 hours lectures, maximum you have to spend 1 hour on revision that here. Okay. So you know how your plan should be that here. For the group 1, you have 3 papers. So you have to spend, I don't know how much time you spend at the law and the tax paper that year, but altogether that year, not more than 9 hours that year of on classes that year. Okay, maximum 8 to 9 hours that, and you have to spend daily at least 2 hours for the self-study. Then you'll be clear in first attempt that year. The class plus 2 hours. We have to be very sincere from the day 1. Very important that day 1. You know, those who comes, those who if they get the rank that year, it is not this super extraordinary. You know, they have a discipline from the day 1 that year, which is very important. You just have to be, you have to maintain a consistency from day 1. Do the classes of all the 3 subjects if you are appearing for the group 1, and do the classes group wise. Don't do all the classes at one time. Anyways that year, so don't spend more than 8 to 9 hours. Maximum 9 hours on classes that day, and do the self-study at least for 2 hours, 2.5 hours. Whatever we have covered in the class that day for all those 3 subjects, do the revision in evening that year. Okay. And if you maintain this consistency, nobody will to stop you to clear the examination that year. Especially, I am taking the guarantee of advanced accounting. You are going to score 80 plus in advanced accounting if you follow my instruction that year. Okay. And don't underestimate yourself. Your aim should be so high. You want to achieve something extraordinary, and you are going to achieve. I'm damn sure that you're going to achieve that here. Just maintain a consistency, be confident that here. Definitely you're going to become a chartered accountant. Nobody is going to stop you that here. Okay. Now I will conclude my session here for today, and we will meet tomorrow. And I request to all of it, be consistent. Do the daily watch of 1 lecture, maintain a consistent 1 lecture watch daily. And maintain except Sunday that year, Monday to Saturday, whatever that, but at least 5 lectures in a week. Okay, it's depend that here now how much time you have for the examination. Accordingly, you can watch the lectures, but I don't recommend to watch the 2 lectures in a day that year. If unless and until you have an urgency or examination near, that's a different issue. But I don't recommend that here because it will be too heavy otherwise. If your examination is coming, that's a different issue. But that's a different thing is that. But otherwise, watch 1 lecture a day. That is enough. Okay, that is for today. And I am giving assurance. I will simplify the accounts like never before. That is for today. Take care all of you. Bye-bye.